Share that YouTube link, someone. That would be great if you could. The YouTube is up and the Facebook Live is up right now. Well, it's not. The Facebook Live is not up yet. Hold on. All right. All right. One moment. Wow, that's loud. Do you guys hear that outside? Oh, wow. The guy's running that huge driving lawnmower over my grass. All right. Good morning, ladies and gentlemen. Today, we are going to talk about how to create a strategy. It's actually easier than you might think. Finding statistical anomalies in the market. We're going to re-go over the one and done in high five and high one strategy. We're going to discuss option spreads. We're going to discuss how to expedite option execution, how to take profits versus holding on losses. We're going to go over our screeners. We're going to go over how to enter orders. We're going to go over position sizing. We're going to be going over pair trading strategies. We're going to go over money management and risk management. We're going to go over curing yourself from fear and mental toxicity. We're going to talk about managing multiple positions. We're going to talk about the psychology post trade, after you open up a trade, how your psychology affects you while you're in the trade. We're going to go over not pressing buttons when you shouldn't. We're going to go over the full education of bull and bear flags. We're going to go over switching time frames. We're going to go over taking quick profits versus holding losers. We're going to go over the significance of what happens in the pre-market. We're going to go over, again, the one and done. We talked about that. We're going to go over position sizings. We're going to go over platform setups. Whoever told you how you should set up your platform, it's a very important thing that nobody talks about. We're going to talk about wide option spreads at the open that generally tighten up throughout the day. We're going to teach you how to determine if the market is going to be good or bad for trading the majority of the time. We're going to teach you algorithmic analysis or technical analysis. What are we really doing here? We're going to talk how to not lose dollars. We're going to talk about what option strikes to pick when you play. We're going to talk about addressing your ego because we all know it's there. We're going to talk about stock selection in terms of trading a small group of stocks you're comfortable with, or exploring the unknowns and trading a large group of stocks you never traded perhaps. We're going to talk about the different trading platforms. We're going to talk about how to minimize commissions, and should you be a rebate trader whose brokerage actually pays you for trading shares, something that nobody likes to talk about out there either. We're going to talk about how to learn the strategy and skills of a successful trader. We're also going to talk about minimizing minimizing tools, minimum tools required besides the Newsbeat live service. We're going to discuss all that and, believe it or not, more. I am Mark Melnick, and welcome to our Newsbeat Live huge free education bonanza number one. Oh, you guys wanted to learn something today. Oh, well, we might have a thing or two. we might have a thing or two to talk about, and I'm not going to go over everything we're talking about again because that would take me a large amount of time as well, but we are going to address every single question here and how we could help you. We're taking advantage of this day that we do not have trading after the passing of George H.W. Bush. Today has been declared an official market holiday, and we're going to take advantage of that and try to bring you value through a bonanza, a plethora, a huge amount of great topics and education. But first, I would like to say thank you to the overlooking overlords over at the T3 Live Compliance team. Kindly pause this video, read this thing in its entirety. After you're done doing that, do it again. After you're done doing that, try to repeat it to your parrot so your parrot might know the T3 Live Compliance rules. Once you are done with everything I said, only then am I giving you permission to hit play on this video. Thank you very much for thank you very much. Here, okay, again, let me just double check the link. I'm going to just double check real quick the link, and we have so many great things to talk about today, ladies and gentlemen. I just want to make sure the YouTube link is working. I'm going to just double check real quick the link, and we have all right, so many the YouTube link is working. I could hear myself talking. I just want to make sure the YouTube like link just is working. To show you like double check real quick the there link, I am talking. All right, the YouTube link is working. Today, I could hear myself talking. I just want to make sure the YouTube like link just is working. To show you like double check real quick there I am talking. The YouTube link is working. I could hear myself talking. I just want to make sure the YouTube okay, like just to show you like double check perfect. Real quick, all right, so sorry about that. I don't know if it was replying a bunch of times, but the YouTube link is working. We are going to have a Facebook link as well. And the first exciting things I wanted to talk to you about today, again, for compliance purposes, whatever, I just want to show you, I just want to show you the swing strategy in which we're going to be going over. So this was tested in foreign markets, and this is just a test of foreign markets. And you could see we took 164 overnight trades in foreign markets with a 93% hit rate. And granted, I don't think we're going to be remaining at a 93% hit rate. I am almost positive we're not going to hit a 93% hit rate. It would shock me if we did. And I'm going to teach you how that strategy was created, how we're going to make money on the strategy, how you can make money on the strategy, how we're going to grow the strategy, how you can create a strategy, how you can add to the already effective strategy. We're going to talk about all that and more and finding statistical anomalies in the market. But that is going to be at the tail end in the video. The first part of the video, I'm going to answer everyone else's questions first, because that's what we do here at Newsbeat Live. We try to bring value to everyone, and I like to put you guys ahead of myself. We're going to talk about all these things, and we're going to address things that I really think in this market, very few people, yeah, I didn't restart my browser. Very few people really talk about. There are certain topics in the trading industry, especially that are taboo, like, for example, trading platforms. Now, we all know that trading platforms are completely customizable. Why has nobody sat there and spent the time with you to show you how to optimize your platform? Maybe the person is or is not qualified to optimize it. In fact, you might have heard someone say, at the end of the day, whatever you're used to is the most effective way of doing it. At the end of the day, it just matters whatever you're used to. That might be true when riding a bike. That might be true on certain things in life. That is not true on trading, ladies and gentlemen. That is a fallacy. So I'm going to go down the list, and there's many other what I consider taboo subjects that we'll be going over. But we're going to go down the list, and we're going to talk about the one and done high five and high one strategy. So first of all, and you know what? If somebody could just do me a favor and you know what? we'll just forget about the fun 21. I just want to focus on the one and done in high five. If somebody right now could post this on our YouTube stream in the reply section and then the Facebook live stream. So if you are watching on YouTube or if you're in the room right now, it's in chat. Those are two algorithmic strategies that I've utilized to make um, a lot of money, like good six figures in money this year. And with these strategies, it basically allows you to take advantage of a stock that has news. And what it is it's basically a news play that allows you to trade something. So let's go over it right now. We're going to go over it real quick. So there's a new version 2.0. So the one and done strategy has a set of rules for how you utilize the methodology. And of course, the question is, can you trade for the first 10 minutes and make a living? And the answer, obviously, to that is yes, you can trade for the first 10 minutes and make a living. It's been a little weird in the past few weeks, and it has nothing to do with the fact that the market went down. In fact, there was a name on Friday that would have worked. So this is basically what you're doing. You're choosing a name with positive or negative news. The best ones are offered daily in the Newsbeat live room. So what I did there for step number one on the one and done strategy is I back tested all the names that I share that have news that I consider to be effective. And now based on this news, you can go long or short a stock based on the first 1 minute candle. So I'll show you how we put it together, and I'm going to use an example from not Friday. I'm so used to having the first day off that the day before was like a Friday or a Sunday, but no, yesterday was actually a Tuesday. So we're going to talk about yesterday's name, and I'll show you exactly how it worked and how you could have applied this methodology and why so many of us, I actually, believe it or not, miss this one, but I generally don't. How many of us actually made a lot of money in this? So here's very simple. I am going to choose this name for you. So step one, as part of the Newsbeat live room, you are going to get that name chosen every single day. You don't have to worry about which one is good or bad. You already will know it. And not only that, when you're in the room, guess what happens next? Guess what happens next? We share it with you. We share with you the names we're watching to apply the one or done. So this was given 8:51 a.m. yesterday. I have Intel short downgraded today. I gave one name. One name. So what people do with this one name is they'll go ahead and they'll look to see if the name gaps up or down. So yesterday's name was Intel. And you could see Intel closed on Monday at $50.13 and opened on Tuesday at 49.52. So it gapped down. It moved down when the market opened. So you already have step two taken care of now. So step one I took care of for you. Step two I'm also taking care of for you because honestly, I am not going to pick a step one that doesn't have step two already active. It's very rare that I give you step one as a downgrade and the name gaps up. If that happens 1 out of 1,000 times, it's because something silly happened right before the open. So generally speaking, I have step one and two already taken care of for you. So for an upgraded name, you look for a long. For a downgraded name, you look for a short of the 1 minute low. So after 9:31 a.m., the first 1 minute bar closes Eastern Standard Time. What you are doing there is you are looking for a simple break of that first candle. If you're looking for a long, you're looking for the breakout. If you're looking for a short, you're looking for the breakdown. Sounds really simple. Sounds really easy. This strategy does not work with every single name you want to play. Will it work on some names? Of course. Any strategy where you buy or sell any security will work in certain situations. The point is, this strategy is still over 80% effective as of November 8th. So the last time I did my analysis on our names, it was 80% effective as of November 8th. I haven't updated it in about a month in terms of the percentage, but I can guarantee you it might be higher or lower. Okay? And barely higher or barely lower. It's not going to change much from there. It's over 70%. And let's talk about it. So let's talk about the one and done. So every single day, I will be looking for a name to give you. Do I have a name every single day? Honestly, no. Do I have a name the vast majority of the days? Yes. Here is the bottom line. So if you're part of the Newsbeat live room, you don't have to worry next year about paying whatever it is, 2, 3 grand for the Newsbeat Live Twitter service. We are giving you that to bring value to your subscription. So in terms of yesterday, where was Intel? In terms of yesterday, I'm going to find you, Intel. In terms of yesterday, this was the one and done name I was focusing on. Were there others you could have focused on? Absolutely. So every single day before the market opens, what a lot of traders do, we call them Newsbeat bandits because they generally trade less than 10 minutes a day. I've been speaking to a lot of the Newsbeat bandits, and a lot of them tell me I'm making money consistently still. I'm just sitting on my hands the majority of the time. And if I sit on my hands the majority of the time, I'm going to make money. And that is what the vast number of you Newsbeat bandits have told me. They told me there weren't a lot of names in the past few weeks. Sometimes I'll give you nothing. Honestly, the point of the market isn't to come in and find something to trade every day. The point of the market is to come in and see what the market is giving you to trade every day. You don't try to be better than the market. You don't force the market to give you something. You do that, you're going to be running a losing game in the long run. You'll make, you'll lose, you'll make, you'll lose. You're not going to come out ahead, generally speaking. So every single morning, as part of the Newsbeat live room, besides for getting this in the room, besides for having me analyze Intel, besides for me telling you how I'm going to play Intel, besides for me going over the entire news note, you have the entire strategy. So just by getting this, you know exactly how I'm going to trade Intel, whether or not you step foot in my room that day or not. Our community. So Intel Short was the name, and again, 8:51 a.m. It's Eastern Standard Time. I don't know if you can read it there. Was the one we were watching yesterday on the one and done. And I'm using this as an example from yesterday. If it failed yesterday, which it didn't, I would still use it as an example. So let's see what Intel did yesterday. So we already know the strategy. After 9, you have to put in a 1-minute candle and it has to close. And after that first 1-minute candle breaks, you could short through that first bar. Here are the candlesticks from Intel. Just focus on the candlesticks. You don't have to focus in on anything else but these candles. So here's the first 1-minute bar, and it closed right here. On the next, so what you're doing is after this 1-minute bar closes, you're looking for the break of any 1-minute candle from this point forward. It happened to happen on the next 1-minute candle. So the low of this candle here was 48.38. You could have shorted through 48.38 right over here on this candle. Maybe you got filled 48.37, 48.38, 48.36. Doesn't matter. You were shorting as this candle broke. What happened? Intel went from 49.38 to 48.97, 41-cent move in 3 minutes. In less than, but maximum 3 minutes. Right over here. Do you know what your puts did in Intel? Depending on which puts you're in, you made between 50 to 100% of your money. You might not look at a 41-cent move and say, "Oh, that's not a big move for 3 minutes." And in an Intel, God, that's annoying to say. An Intel, in Intel, that's a tremendous percent return. So there were traders yesterday who were messaging me, "Mark, what happened with the market?" Because they left before 9:35 a.m. One guy have an email. One guy told me, he's like, I came in at 9:25 a.m. I was running around. He was having some, family things to take care of. No issues, thank God. Just some family things. Like I came in at 9:25 a.m. I saw the name. I saw Intel. I logged in. I traded it. I shorted it with the one and done strategy. I was out of the room by 9:35 a.m. He was done. He worked 5 minutes. 5 minutes. How much money do you think At least what he told me. Again, I'm not looking and confirming his account statements. They are called Newsbeat bandits. How much money do you think he made in 4 minutes of trading? Or he says he left at 9:35, so I'm sure he was done before that. How much money do you think he made in that 5 minutes? Anyone want to guess how much money he told me he made in that 5 minutes? And he doesn't lie to me. Well, exactly, Boogie. Off of how much? He made $2,800 in 5 minutes. He does not take more than $5,000 worth of options or less per trade. Is he risking 5,000? Sort of yes, sort of no. I mean, he doesn't take $5,000 losses, but that's technically what you're risking. Just like if you take 100 shares of Apple at $200, what are you risking? You're risking $20,000. You're not risking $100 if you think you're putting a 1 point stop and anything can happen, right? He made $2,800 in less than 5 minutes utilizing this. There are hundreds of traders in our room who do nothing else that we do here. None of the swing stuff, none of the intraday stuff, none of the overnight stuff. And they just apply this methodology because of its consistency. Those are what we call the Newsbeat bandits. In terms of the high five strategy, I haven't been. The high five strategy is another strategy that we talk about on if you wish to trade more. I have not been doing this strategy recently. I have noticed that it has been working less and less. So I've been ignoring it. I don't know where the numbers are. I know I say 72.9% effective as of today. Today, that's actually a bad word. Today was done in like back in October. So there was like a full month and a half where this number changed, and I can just short of guarantee you it's probably resting 65 to 67% effective, which isn't bad, but I only give 70% or more. So the high five strategy, again, if you wish to watch it, is a strategy that has been less effective. I have been a bigger fan of the high five strategy, but there was a new strategy we gave called the high one strategy, which sounds like a dude who smokes marijuana all day. But what it actually is on the high one strategy is it's a strategy here where I'll break you down step by step. It's very simple. All you need for this strategy on the high one strategy is a 1 minute chart and an exponential 8 moving average. That's it. And I call them simple, effective, easy strategies because you can make a lot of money on them. And yes, I do make, comparatively to most traders, a lot of money on them. Step one, I got that covered. You're good. Choose a name with positive or negative news on the Newsbeat live morning game plan. For good but lesser results, take a name with very high pre-market volume. I would ignore that part. I would just go with the best results. So I got step one covered for you. I'm going to give you the name just like I would Intel. Step two, there's a high one and a short one. Your stock must gap above the exponential 8 on the daily for the high one, or on the 1 minute chart for the high one, or below the 1 minute exponential 8 on the short one. I got that covered for you too. Again, 99.99999% of the times, the names I'm giving you in the morning already have step one and step two. So generally speaking, you don't even have to worry about these two things if you're in the room. I got them covered for you. Step three, then is not a word. Let's add that to the dictionary. The stock must test the exponential 8 moving average on the 1 minute chart, and then the bar must close. Step four, the next time a new 1 minute candle breaks any prior 1 minute bar high or low, if we're talking about an upgrade, it's high because we're buying. If we're talking about downgrade, it's low because we're selling. Simply buy in or short in using common shares or options. Step five, take your money. Sounds stupidly simple, right? How would have that worked in Intel? Well, let's take a look. Here's the 1 minute in Intel. We know you could have done the one and done strategy. We already know that was effective. We already know you could have made a lot of money in less than 5 minutes of trade. So what you do now What you do now is you wait for the exponential 8 to hit because that's the new high one strategy, right? So you're waiting. So this yellow piece of dental floss on my screen is my exponential 8 moving average if you wanted to know. So what am I doing? I'm waiting for these candlesticks to hit that yellow dental floss. So it hit it right over here at 939. Now, after it hits here, the next time the bar breaks down, you short again or buy puts, whatever, however you want to trade it. They're both effective. So here's the low of this bar is 49.20. You broke down right here to 49.12 and then 49.06. And then you grinded all the way back down to 48.93, 48.96. The point is you could have shorted right here and you would have had ample opportunity to take profit. So it would have been effective again. So using those two preset strategies, when I actually show you guys, these, upgrade this or downgrade this, I am sharing with you exactly the way I would trade it. You know exactly the way I would trade it without even ever stepping foot in the room. There is a number, hundreds of Newsbeat Live members who don't post in the room. A lot of times they don't come in the room and they just sit there and or they'll come in the room, they'll see the name and that's it. They'll shut down the broadcast. And they know what to do. And they know exactly where to do it. And they're making a living supporting families, six-figure incomes, modest six-figure incomes. I think I've seen as high as like $300,000 from a bandit. Honestly, if there is a bandit making seven figures in the room, I don't know who they are. I don't have everyone's P&L. In fact, I have no one's P&L statements, right? Just whatever you share. I will, Vincent. You're going to have to wait, though. So that's the value. That's one of the values that we bring you in the room with the one and done. And these strategies I didn't create right now. They're created a while ago, and they still work to this day utilizing the methodology. So, Robert, that is my take on the one and done in high five. You have to choose a Newsbeat Live name plan, game plan name. Does anybody have any questions in the room regarding that strategy? You guys like it? You have any thoughts on it? Scalpers market for the last 2 months. Phil, scalpers market for the last 20 years. The only difference is, Phil, it's always a scalpers market and it's not always a swingers market. So whether in a swingers market, it's always a scalpers market. Yeah, you'll make more money on the swing side, but there's always a scalpers market. That is the beauty. And I agree with you. It is only a scalpers market now. I completely agree with you there, but it's I'll take you a step further. For me, it's always been a scalpers market. You can always scalp. Who did you find it? Or I think you mean where did I find it, Dave? We invented it here in the Newsbeat live room, the methodology. It's one of the algorithmic strategies we created that works well in wink wink every single market. And we applied it in the market here to make money for manual traders who aren't coding and programming these things. Where's the high one slide? Do you want to see the high one slide again? And we have so many other topics to go through. We're going to go through so much. We have so much value for you guys. And again, and if you miss any of these slides, you're going to have this video. Go back and watch it later. But right here's your high one slide, Kyriakos. I appreciate that, Bruno. On Thinkorswim, you need the intradays off to set the 8 EMA like mine. So let's talk about how do I have my exponential 8 moving average set? I have it set for the average type of exponential and the average type of last on TC2000 or free stock charts. That's how I currently have it set. Appreciate that, Bruno. How do you know what options to scalp? Good question. On Intel, I knew the spread was going to be tight on Intel because Intel options are always tight, generally speaking. So what I do is when I know it's tight, I generally, unless otherwise noted, if I told you in the morning I'm going to buy Intel options, you would already know I'm attacking $49 puts that expire this week. I always go to the first out of the money on the earliest expiration. Sometimes if I don't, I'll I'll let you know otherwise. So right over here, I would have been taking the $49 puts in Intel. First strike at because the breakdown was 49.38. The closest put out of the money were the $49 puts. The earliest expiration were the ones expiring this Friday. I would do the $49 puts expiring this Friday. Can I make it simpler, Jim? No. It's about as easy as it gets to make money. That answers Dave. On the one and done, how when I proceed, when I have a few candles go against you. Perfect. So, what if the candles go? Let's take the flip side. Where do you set your stop? I set my stop always at the high of the candle I shorted through. So, for example, at Intel, great question. Thank you for asking. So, if I shorted here through 49.38, my stop would be 49.61 or 1 penny above the top of this candle right here. So as soon as you short through 49.38, you already know where I would personally be looking for a stop. That would be at the top of the candle you shorted through. All right, so when I post this, because of the number of share people, if you can't see the room right now, somebody is asking, why do I post minus and equal signs next to each other? I basically, in the chat, I go like this. And you might ask, why do I do that? It's because I'm a full-time trader, obviously, so I'm looking at the market. When I answer questions, I use that as like a litmus test line to look at all the questions below. So a lot of times I will miss your question if you're just randomly asking throughout the day. But to your benefit, I'll constantly say, all right, guys, I'm done looking at the market. So any analysis I can offer you now would be the time to ask. And then I put those in just like that so I could see all your questions without needing to like scroll up through chat through hundreds of questions, perhaps. Just a placeholder for me to easily um, answer questions, Bobby. Hmm. Thanks, Andrew. Glad you're enjoying it. Are you using keyboard shortcuts when you exit out of your positions? Yes, Erickson. I want to get into more of that when we talk about software layouts. So we're going to have a whole thing on that. I don't want to hop to different subjects. I just want to take care of this subject and move on. I on an Intel, Alan, I will generally do a market order. What is the spread on Intel? 1 or 2, 3 cents max on the options. So Alan, on Intel puts, I would generally use a market order on this one because the spread is so tight. Good question. Hmm. That's why we're answering everything for you, Andrew. We're going to get you acclimated and comfortable. Good stuff. When I close my puts, did you say go out with a market order versus a limit order? So Sharon, I generally like to sell out on a limit order. Limit orders are generally the best thing to use. Why? Because you have more control. So for example, if you bought options or even stock, if you shorted Intel stock at, 38 cents and I don't know, maybe you shorted a couple thousand shares and the stock drops 30 cents and you bid and you buy out for a 30-cent profit, you make your whatever, 600 bucks. With options, it's a little different because you could go heavier and make more money. So with Intel options, you would have made probably a ton more money than somebody who were to trade common stock. Generally, I like to get out on a limit order. So, for example, if you bought option puts at 40 cents, maybe you put out an order at 45, 55 cents, 50 cents, 60 cents, 65 cents, 70 cents. And that would just allow you to not really worry about it. And if it shoots up to, your price, you're going to lock in that profit. So generally limit orders. But if I have to get out of it, Sharon, I will use market orders. When do I take a profit once in a trade? Depends on the setup. It's a very blanket question. Generally, I like to it's the mentality, Louis, because there's an infinite number of answers I could give you. When do I take a profit? What I would say is never look for a direct number. Never look at a trade and say, I need to make $500. I need to make $5,000. I need to make $2,500. I don't think you should look at a trade like that. You should look at a trade as where can I make money and hold the position for a larger move on the house. In English, where can I sell two-thirds, three-quarters of my position and lock it in, where no matter what happens with this trade from this point forward, I'm going to make money. And then be as loose, be as tight as you want with the remaining portion. That is generally the mentality of how I maintain my consistency rate. Always put yourself in a win-win situation. Yeah, if you lock in three-quarters and your other quarter keeps shooting up, could have you held that other three-quarters and make more money? Yes. Generally speaking, I find that is not the best thing to do. So the one and done, I don't have the steps and slides ready with. So we could go through the slides again. And again, rewatch this video if you want. Here is the high one strategy, which it's the opposite is the short one strategy, obviously. Here's step one, step two. And again, rewatch this. I'm sure you guys are going to be scrolling through these videos looking for these things, and that's okay. Step three, and I'm sure a lot of you are going to watch it a bunch of times. That's cool too. Step four, step five. And the slide for the one and done is right over here. Good question from YouTube. Thank you for posting that, Colton, really. John Gunnerhow. I pronounced your name correctly. How do I select the Newsbeat names and what's your scanning criteria? Excellent question. I'm going to put your question at the bottom of the list here, not because you're less or more important, but because you're the last question. How do I select Newsbeat names? You're going to really enjoy it. And again, this is going to go on for a while here today. This is by no means going to be a short video, but I don't want to jump ahead 20 questions, and I will answer you, John. I wrote you down on my list. Looking to do a dollar spread. That's my issue. Hmm, okay. You're generally in the right direction, MJ. I probably do a little better than one-to-one. You could even do a little worse than one-to-one and still be effective, but generally you're barking up the right tree. Sure, I do, Bill. It's just going to be not a simple, effective, easy strategy. There's going to be more to it, Bill. Hopefully, we could talk a little about that. Correct, Andrew. So, Andrew is saying enter in on a market order and then try to put up limit orders immediately. Exactly. It's okay, Yosef. On the one and done, you have your first candle, and before you enter, there are a few candles against you, and then it goes to go in your direction. When do you enter? I enter at the first break of the 1 minute candle, Yosef. So for example, in Intel here, right over here between 9:31 a.m. and 9:32 a.m., I would enter as soon as the stock broke $49.38. Personally, I don't, Steve, but there are people in the room who do that. As honestly, why I don't sell puts or sell calls, especially sell calls, because generally I don't want to be announcing trades that puts members of the room at a potential infinite risk. Just the morality behind it. Does it happen? Not really. Can anything happen? Sure. So just from that mentality alone, I tend to avoid that. But yes, there are definitely people who are doing that, Steve. Hi, Grant. What time do I usually post that I have an AE? I don't, can you, what is an AE? A game plan name? Is this like Wheel of Fortune? And it's like, I'd like to buy a vowel, E, do, do. It's like, I'd like to solve the puzzle. What is game plan name? Is that what you're referring to, Grant? Um, all right. I don't use the VWAP. It is very effective for people who do. Everything is effective if you can make money off it, technically speaking. Okay. The one and done times. The one and done times are done when the first 1 minute bar breaks in the morning. Usually you'll have it within the first 1 to 5, 6 minutes maximum. That's when I use it. So the one and done strategy is only, so that's a good point. The one and done strategy is only good for the first 1 minute bar. Sure, Ron. Yes. And it's good over 70% of the time. Steve, any concern as this room grows that we're moving the price? I have seen no evidence of that because we're trading names like, again, for example, Intel, which did 31.5 million shares on Tuesday. So if you deal with a room and you're trading small cap names, even small cap names with volume, you're going to have algos at different levels and you can influence the price. We're not moving the price of Intel. We're not moving the price of Apple. We're not moving the price of Facebook. We're not moving the price of Amazon. If we were, that would actually play to your advantage, not to your disadvantage. But even with that being said, no, it's not a concern because we trade the largest companies on the planet, Steve, and we focus in on the largest cap names. Excellent point. All right, I want to move on. So, look, I'm going to move on a little faster from here on out. I'm going to move on a little faster. And and my question briefing is going to last 1 minute. What does that mean? You have 60 seconds to ask your question after I ask for questions. But I have good news for you. I'm still going to answer all your questions. You're going to have to email me though at mark.melnick@t3live.com. I don't want to get caught with 30 minutes per subject. So you have 60 seconds to ask a question after I'm done with the next one because I want to make it easy to move on and I want to answer everything you're doing. So I'll take time out of my day personally to answer your question. Good enough? We're going to move on. Option spreads. How do I know what stocks to do with an option spread? So a lot of times you are trading, you're going to notice that when you're trading options, a lot of times there's a very, very large spread. And that very large spread could be anything. For example, if a bid is at 10 cents for an option and an offer is at 20 cents, I consider that a large spread, even though it's only 10 cents, because you're paying twice as much on the offer as you are on the bid. So when it comes to spreads, excuse me, I generally like to be tight. So, for example, if I have a one and done and I'm looking at a stock like Workday, like WDAY or Wayfair or one of these other names, I might generally opt out to not trade it at all rather than market order and hope and pray for the best price improvement possible on a wide spread. $2 by $2.10, I don't consider that bad if the stock moves. 10 by 20 cents, I do consider that bad. You know, be very careful of, large spreads. A lot of times you'll have something stupid like 40 cents on the bid and $5.90 on the offer. I just say, okay, I'm not trading it. So generally with the larger option spreads, key is if you want to get filled, try to be in the middle lower end of the range. Also keep in mind, for example, I'll give you a good example and I'll teach you here. If you're asking questions now, I'm not going to fully be able to answer it. So if anybody else wants to answer questions in the room while I'm talking here, as we do have hundreds and hundreds and hundreds of people here this morning, feel free to do so. And I'm going to share my email. So if you watch this and you think that later throughout the day, you're like, Mark, what happens if this happens? What happens if this moves or that moves? I'll be able to help you. So let's take it a step further now. Let's say you have a bid in a stock at $1, and again, I have to generalize because every option spread is different, right? Let's say on an option you want to buy, call or put, doesn't matter. Let's say that there was $1 on the bid and $2 on the offer, and I wanted to get filled. You know what I do? I bid $1.05 and I cancel. I bid $1.10. See if I get filled. If I don't, I cancel. I bid $1.15. I cancel. I bid $1.20. I cancel. And what I do with that is I literally dance my bid up slowly to see if an algorithm will fill me. Now there will come a point where I don't dance up. Like if I start getting to like $1.40 and they're not filling me on $1 by $2 spread, I'll just say screw it. You can have it. I don't want to get filled. But what you could do a lot of time, because the market is so robotically based with the option spreads, is you can, if you wish to pay, dance it up. So when you see $1 by $2, you throw a market order, let's say, and you want to buy $2, which I wouldn't do or recommend you do. And a lot of times you'll get filled at like $1.79 or $1.83 or $1.68, and you'll get some fill that's better than the $2. I use Charles Schwab. We'll get into more of that later. They tend to give you really great option price improvement. Some softwares don't, and some of you will get filled at $2, which is you're almost guaranteed to lose money. So instead of using the market order, try to dance your bid up to a price you're comfortable with. If they don't fill you with the price you're comfortable with, stop attacking it. And that is how I deal with option spreads. Okay, and we're going to move on into the next subject real quick. Questions. You have 60 seconds to ask. If you don't ask within these 60 seconds, you have days, weeks, months, years, decades potentially to ask your question at mark.melnick at t3live.com. And I'll answer everything for you, but just for the sakes of this education bonanza, I don't want to get stuck on a subject for 20, 30 minutes. Any questions on option spreads? Make sense? Does that make sense? You could be like, Mark, it makes perfect sense. That's cool too. Do you guys get it? So Tommy, you want to know about strangles and straddles. I have to add that to the subjects we're going over. Si we're not going over, we will go over sizing, not right now, Richard. Focus in on the option spreads. Any questions on that? When you get you get so Ted is saying he gets frozen and he's not doing the right thing instead of he gets frozen and he's doing nothing instead of doing the right thing. That's because you're nervous and you have no idea what to do. Nobody shared with you a consistent methodology. Once you have faith in the methodology and you start making money, it's going to be easy for you. One of the things I can guarantee you that's going to be easy for you is when you see me taking trades like, for example, the Caterpillar puts. The last trade, the last swing trade we opened and closed. When you understand why I'm doing it and you start getting things like this, where it's like, I'm obviously testing my new filter, so I'm like, I'm just trying out like a new strategy, just a few Caterpillar puts here. I paid $3.85. And then you're going to look at the chart of Caterpillar and you're going to say, yeah, I see why this could work. You're going to start to gain the confidence to push forward, and you're
Educational.
going to know what to avoid. So right now you're frozen because you have nothing that you're confident in. Wait till you actually see the results. Wait till you actually see you're making money. Then the confidence is going to grow upon you. Okay, moving on along. Neil. Neil is asking, how do you expedite option and Kyriakos? Neil and Kyriakos, you guys are asking me, Mark, how do I expedite option execution? All right. If I wanted to buy those Intel puts, $49 puts, how long do you guys think it would take me? Let's say I didn't even have, if you type it in on your screen. So what people do, just so we're clear. So what Newsbeat bandits do, and I'll pull up several accounts here. Let's see which one I'm going to log into. I'll log into one of my accounts here, so I'll show you. And I have good news for those who like my layout. Stay tuned. All right. Um, okay. So, um, here, and just don't copy my account number, you crazy people. Just want to make sure my account number isn't. Why? I don't even know what you would do with my account number, but so here's my option. Here's half of my layout. The upper half has positions, buying power, etc. And it's on Etsy because we were doing it. Watch this. So in this box right over here, I keep up. In this box over here, I have the common stocks level 2. In the middle box, I have the calls, the option calls. In the right box, I have the option puts. So I have common stock on the left, calls in the middle, puts on the right. And if I answer any of these questions, I'll cancel other people's questions out because if I answered your question on an earlier question, we're going to combine it so it'll also make it simpler and easier and answer everyone. Okay. So, okay, Mark, Intel. How would you set up for Intel? Well, if you got it on the Newsbeat game plan, you could simply type in Intel. Right over here is it would actually set up right over here, and you could set up on the $49 puts. My preset is for 100 contracts as my standard amount. You could change it to whatever you want. You could change it to whatever 10, 20, 20, whatever, wherever your number is, everyone's number is different, right? So the $49 puts in the morning were very, I think they were like 30 cents, like 25, 30 cents. And obviously Intel put shot up to like $1.44. So what I would do here is, for example, let's say I would go to market order and I'd be ready. So let's say I was watching the one and done on Intel, I'd be sitting there, I'd be doing nothing, and I'd be watching the stocks level 2 move, and as soon as we broke that 38-cent level I showed you before, I would just left click once and it would open up the position. And then what I would do afterwards is I would change maybe from market order to limit order. And then I would post the number of where I wanted to sell. And then I would just simply post it. Simple, right? Maybe you want to sell 3/4 of your position for a profit. Let's say you open 20. I would just simply go down to 15 and try to sell out of 3/4 of my position at a limit order. So that's how I would do it. Now, in terms of Expedient, this is the fastest option platform that I have found out there. Am I qualified to tell you what I feel is the fastest option platform out there for the majority of users? Yes, I am extremely qualified for that. And that's because I played video games my whole life. And you might say, oh, that's weird. What does that have to do with anything? Well, as an ex-professional gamer, the thing with options is you're trying to expedite your execution. You're trying to get from point A to point B as soon as possible. I have designed my Street Smart Edge to allow me to utilize that as quick as possible. And that is a very important thing that nobody talks about. In fact, most traders don't want to share their setup. And the traders that do, which are almost none of them, how many traders out there are offering you their trading layout? They feel it gives them a disadvantage. It does. But if you're so confident in what you do and you really want to genuinely help people, you have to share your advantages with others, even if it comes at your expense. So if you're a member of the Newsbeat live room, for compliance reasons, I cannot give it to random people on YouTube. For compliance reasons, I cannot give it to random people on Facebook. For compliance reasons, I can't give it if you're just part of the free trial. But as a Newsbeat live room member, let me show you why this alone is worth your entire membership. So for example, let's say I wanted to buy 100, let's say I wanted to buy any stock. Here, pick a stock. Somebody pick a stock in the room. AM, let's go with AMD. Oh, AMD. All right, AMD. How long do you think it would take me to buy AMD calls? Take a guess right now. I don't have it typed in, right? I have Intel on my screen. How long is it going to take me to buy 100 AMD calls? How long? 2 seconds? 5 seconds? 4 seconds? Let's say I didn't know. 1 second? That's about right. All right, you ready? You ready? Uh, I have Intel up. I want to buy AMD. Watch it. I'll do it in slow motion, which is slower than I would do it. Watch. I type A. Whoops. All right, we're right here. You ready? I type A M D. Enter. Click. And I bought 100 of the 21. Notice how it went immediately to the 21 and a half calls. My software is designed to go to the earliest expiration and the first call out of the money. So automatically, when I typed in AMD closed at 21.12, it automatically went to the 21 and a half calls expiring this week. And they're 43 by 44 cents. If it's hard to see, I'll read them to you. It's 43 by 44 cents. I click buy to open, and I bought 100 contracts at worst 44 cents. Generally, it'll fill me 43, 43 and a half on Schwab. So when you want to know how to expedite your option execution, take it from a person who is a professional gamer and understands that the least APMs or actions per minute is the most effective way to utilize order entry. That's what it comes down to. That's the science behind it. Gamers try to do what they need to accomplish in the game using as few actions as possible. This is as few actions as possible. A, M, D, enter, left click. 5 things. AMD, how fast can you do AMD, enter, left click? That's how long it will take you to buy AMD utilizing my software. Oh, Mark, I want to buy Ford. That's easy. F, enter, left click. I'm in. Immediately goes to the 9.5 calls. Immediately has a market order. Immediately has the expiration this week. Isn't that easy? This alone has changed people's lives. This alone has changed people's lives. For disclaimer purposes, I only offer it out for demo purposes only. It is only used for paper trading purposes only. I am not responsible whatsoever for your trading wins, your trading losses, for misuse of the software. Whether you download this software on a flash drive and you take the flash drive and you throw it at somebody's head, it hits them in the head and they're in the hospital, I'm not responsible for that either. But this is life changing in the markets when speed is what you're trying to obtain. And we offer that for Newsbeat Live members only. And it comes with a disclaimer attached. That's why it's only for Newsbeat Live members only. Do you guys hear that outside? Do you guys hear that outside? Oh, you guys don't. So I have this like soundproof room. Like I have soundproof paint, soundproof boarding, soundproof foam. Yeah, believe it or not, there's soundproof paint. I have other soundproofing. I have $25,000 later. I have a studio here in which blocks out sound, and it's actually here cash registers ringing. Okay, that is how you expedite your option execution. All right, we're moving on along, ladies and gentlemen. Don't worry, we're going to take our first break soon. Our first break is just going to be 5 minutes. 5 minutes. I'm going to let you use the bathroom. I'm going to let you make a drink real quick. And don't worry, it's still going to all be recorded. You are going to get everything and more. And don't forget the shining light is actually going to be creating strategies and finding statistical anomalies. All right. So AFSHI. Okay. So AFSHI. AFSHI is asking, how do you know when to take profits? This one is and again, not all questions are going to take long. It's simple. What I like to do when it comes to taking profits is always plan the house's money. There are pros and cons to every single strategy you do. If you sell a little bit on the way up and it keeps going up, what is the con of that, Mark? Well, you could have held everything. You could have held everything. And if it goes up and you sell there, well, what is the con of that, Mark? It could have kept going up. And you should have held everything. Maybe you should have doubled it, doubled it, doubled infinitely. And Captain Hindsight comes to the rescue and shows you exactly what you should have done. But you want to know what causes the least psychological toxicity? For me, see, the funny thing about traders is that most traders actually focus in on the trade as how do I make the most out of this trade? Wrong. Bad, bad trader. Bad trader. Don't hit people. Bad trader. You know how you take a trade? You take a trade and you say, how do I make money on this trade and guarantee I'll be psychologically clear for the next trade? You think it's about the next trade you make? You think it's about the trade you did yesterday? Your trading has nothing to do about what you did yesterday. Your trading has to do with the next 100 trades you're taking. Anything that happened before is irrelevant. Everything is irrelevant. It's about your next 100 trades. Always think of it like that. You will have losers and winners, as you know, and everybody will tell you. But psychologically, you need to keep yourself clear for all those 100 trades. So, for example, I buy 100 contracts. Just that's my minimum standard on my preset. Okay, so I buy 100 contracts of something, right? Which is the equivalency of 10,000 shares if you're not used to options. So I buy 100 contracts of something, and I pay $1 for the option. So I buy 100 contracts just for mathematics. And what happens actually is I think the stock could explode up. I think these options might get to $2, $3, maybe. And I can make nice 5 figures. Bang. Crush it. What do I do? Well, I see the option go from $1 to $1.10. I see the option go from $1.10 to $1.20. I see the option go from $1.20 to $1.25. So when it goes up to $1.25, it's not even 25% of the way. It is just 25% of the way until, let's say, $2, I think it's going to get to. I'll probably peel off 80 contracts right there. Why? Because 80 contracts, selling 80 contracts at 25-cent profit is $2,000. So you mean off this one trade, I'm already up 2 grand? 2 grand on one quick trade? I'll hold 20 contracts. Maybe we will get to $2. Maybe we'll get to $1.50 and I'll say, screw it, I'm done. Market started turning down. Things are not looking as good as they were before. I changed my mind. I am like I am like my ex-girlfriend in the shopping mall with my credit card. I don't know what to do. I'm changing my mind every 10 steps I walk down the aisle. Every 10 steps I walk down, there's a new store, there's a new sale, there's a new this, and I don't know what to do with it. Why use that silly analogy? Why? Because your goal, if you are intraday trading, is to come in with zero and walk out with zero every day. On your overnights, different strategy. We're going to get into that. So if you buy something at, don't worry about the money either. I mean, I'm using 100 you could be 10 contracts. It doesn't matter. All right, you did 10 contracts. You sold 8 of them at a 25-cent profit. You made 200 bucks. And then you have the rest sitting there. And you could do whatever you want with them. I like to put myself in a position where if I think something's going from $1 to $2 and I buy it, I like to sell early a large portion of my position. If I'm right, I sell. If I'm wrong, I sell. Notice something about that strategy? I'm giving myself the opportunity to lock in money immediately and have the trade be on the house for free. And if it goes against me, I'm also giving myself the opportunity to take a modest loss, as opposed to holding it and watching my P&L drop down through the floor, avoiding the big loss. So when I buy something, my first thoughts are, how do I sell this? And whether it gets to my price target or not, if I take a modest win, I'm going to be in good shape. If I take a modest loss, I'm going to be in good shape. And I'm going to be psychologically sound for the next trade I take, and the next trade, and the next trade, and the next trade. Do you really want that one trade where you sat there and you held 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 because you had to make money? And God forbid, you doubled in, you doubled in, you doubled in. Oh, whoo! I doubled in a bunch of times and the trade ended up working, Mark. Yeah, it ended up working, Mark. It ended up working. Then 1 out of 10, 1 out of 20, 1 out of 30 times that doubling in ends up you blowing up. It's never worth it to double in unless that's part of your strategy in the first place. Like, I want to buy 100 contracts, but I'm going to start with 25 and then buy another 25. If that was your goal at the beginning of the trade, that's different. But when people open up a trade and they're like, I'm just going to double in here to get a better average price randomly, that person is at risk of blowing up his or her entire trading account. So the way I again combat that, Afshi, is I sell early, all to the majority of my position. And that's how I remain consistent. We're going to go into commission structure op trades as well. Ladies and gentlemen, it's 11:16. We're going to be back here at 11:21 a.m. You have a 5-minute break. I'll be here answering questions because I don't need a break, but I'm giving you a break before I go and move forward. All right, we continue. Break time, 11:21 a.m. Best call you've ever been on, Andrew. It's going to get better from here, guys. So from here, it's going to get much better because we're going to go in through screeners, strategies. I'm going to also teach you how to create strategies. So we are not even scratching the surface. This education is, I did not, I was not kidding when I said this is the huge education bonanza. There is another show tonight. Or actually, there wasn't supposed to be a show last night, Rob. I think I screwed up and did it. There should be another show tonight. It'll probably be me saying, watch this, but we'll see. I know I'm a psycho. My wife was right all along, Rob. You just confirmed it. Awesome, Sharon. There's so much more we're gonna bring you today. Believe me, we haven't even scratched the surface. At the end of everything, Art. I can't give you a time because I have no idea how long it's going to take to go through this. Oh, there's a T3 employee. So on a side note, Mike, I'm trying to get this video to you as early as possible, and I know you have what's that called again? A life, like most of us do here, unlike myself. I'm gonna try to get you this video as early as possible, but I really don't know when it's gonna end. Quite the opposite, Teresa. Does my wife hate me for taking so much of my time and attention? My wife loves me more because I'm the person that likes to help others, and that's one of the reasons why she loves me. Believe me, she had to get past this. Once you get past this, there's a soft and chewy center. Awesome, Don. I'm I respect that. I've been trading since 99. Completely respect that. My thoughts on PDT. You're asking straight up. You're like, Mark is like, let's go into straight up the John Hancock premium. I don't know the structure of this thing. I'll be honest, so I could just judge it technically. I like that you're above all the moving averages here. You're in the upper mid end of the range. The true algorithmic support for tomorrow, $15.62. That's the most I could say about PDT. Thanks, Teresa. Will we be doing trend lines today, Mo? Maybe. Maybe. We'll see. My thoughts on Mike. We love Mike Camo. I would put him as one of my top 20 favorite people on the planet, and I probably know a couple million people. Oh, MIC the stock. Macquarie. Okay. All right. Let's take a look. Uh, I mean, I don't know the fundamentals of this company, so I don't want to say something good or bad about it. So I'm just basing it completely on the chart. I see support at $39.53. Oh, thanks, Art. I have to put myself together well because, I wake up in this. Honestly, like when I go in the bathroom, I have to like duck by the sink to avoid the mirror. So, to prevent the psychological toxicity. You know what, Art? I'm really liking Fizdale. I'm actually, even with the Knicks with their sucky record, for the first time in years, I'm actually enjoying the Knicks games. And as much as I love Carmelo Anthony and I have his jersey, I'm happier without him. All right, it's 11:21. Rob, but Boogie or Deuce might make fun of me about my Jets, so we're gonna we're gonna don't tell anyone I'm a Jets fan. I switched from the Miami Dolphins. I was loyal to them for 25 years. Don't tell anyone. I always root for New York teams too, regardless of who I like. Okay, we're gonna continue. Elizabeth, Robert Sandback, you're asking about a screener. Do any of you guys hear that noise right there or no? Did any of you guys hear that? That is amazing. This is the greatest room ever. If I told you how loud that was. Anyways, so Robert Sandback, Elizabeth, and many others, I'm sure, you're asking about a screener. So, in terms of a screener, I use TC2000 because it's the best in the world when it comes to customer service. So, if you go to Worden or TC2000 forum, literally, I'm Googling it right now, and you literally go here, it'll literally say, ask a trainer, get help, and you can literally post a question on having you you can actually ask them to ask you a question here. You can actually post like, I need a formula that does this and this and this, and they'll answer you. That's how I do it because I'm not computer savvy. So when it comes to screeners, I like TC2000 because it's just the best out there. So if I do, for example, Easy Scan, and you look, you could set up, new condition. Honestly, as somebody who is not code savvy whatsoever, I found this very easy to learn in less than an hour, just to give you a type of thought. So you could look for a lot of things like bearish doji sandwiches, which my good friend Dave Wise created the term, and you could look for bearish doji sandwiches or bullish doji sandwiches or funny names like that or breakouts and whatever. So you can so like right here, this code, this simple one line of code, I actually asked on the forums. But for example, let's say I wanted to say, I want to say the stock has to be trading above the exponential 8 moving average, and I want the MACD to be turning under this level. I would simply add that. I would simply post on this forum over here and ask the code, and they would respond, and I would be able to add line of codes to here. So that's when it comes to scanners of what I use. There's an infinite number of things. You could look for anything you can imagine. And what they'll do on the forums here on TC2000, I have a gold subscription. I didn't even go with platinum. I didn't need it. And you'll be able to just ask whatever questions you want. Just type in TC2000 forums, and it'll take you right here. And you'll be able to do whatever you want with it. Okay? So when it comes to scanners or screeners, that's how I utilize it. Quick questions? Quick questions on that? Make sense? Uh, mm. Yeah, I'm a Giants fan as well, but I root for all New York teams. Can I cover the scan? All right, so Robert, you're taking a step. You want to cover the scan I gave you. So the scan I gave you, the two scans, the long scan is basically looking for a green bottoming out candle whose low of that candle is the lowest bar in a 10 candlestick range. And the short candles, like so for example in Caterpillar, how we chose this one is the Caterpillar had to put in a red candle on, it's only on the daily chart. So when we bought Caterpillar puts on Monday, obviously home run opportunity type idea, right? And this one obviously worked phenomenal because the market collapsed, and I get it, I get it. But it gapped down and it worked, right? That's the bottom line. So we were looking for the high of this candle here on Monday to be higher than any other previous candle in a 10 candle range, and this candle had to close red. And that's why I took Caterpillar short. So that's how the scan I work gave us. Now, let me take it one step further, Robert. Let me take it one step further. I am going to be. Does anybody hear that? Wow. There's a dude like right. Forget it. I'm impressed. Anyway, no, not in a 10% range and a 10 candlestick range. Now, in the future, Robert, I am looking for large ranges like 10%. So I might add that. So when I look through my filter, I'm agreeing and disagreeing to certain parameters. In the future, I'm going to add a lot of code. So when I shared with you guys that code on the Newsbeat live gathering, I told you, and I'll tell you it again and again, it's in its vanilla stages. I'm going to add potentially things like that. Exactly what you're saying, and add more, and add more. And as Colton is 10 steps ahead of us, that as well. Hi, Dana. We would have to wait for. I'm sure Dave has it, but he's not in the room now, and I'm not going to text him and ask him to come on and do it on his day off. But I'm sure he'll give it to you tomorrow, Dana. All right. So on the pattern day trading rule, on the pattern. Oh, God bless him, Vince. That's wonderful news. On the pattern day trading rule, I can't legally tell you what to do or not to do. I can't legally tell you which brokerage you should or should not be on. I am just telling you what I'm doing. So I have a charitable account here where the proceeds will go for charity, just like your room membership if you sign up through the open house. Again, we believe in doing good things in the world, and making money is really not that difficult. So, as the notifications say here, the remaining 9,000 will be available by December 6th. So I'm starting with a $10,000 account. They gave me 2 free shares of stock, a Fitbit share and an AK Steel share. I physically did not buy them. That's why my account shows like up $8.30. This is what I did. I hit account, I hit settings. Let's not go there. I hit account. Let's go to account. There's something here. Banking. Nope. It's easy to fund. Account. Free stocks, documents, history. All right, so here's my deposit. Here are the 2 free stocks they gave me. Anyways, there's a thing when it comes to option trading in your account on this, in which, and I'll find it later. I'm not going to find it now, and I'm sure somebody else will, where you could literally turn on or off the pattern day trading rule with a cash account, and I turned mine off, so I won't be limited in my trades. So again, I don't think Charles Schwab allows you to do that. I think legally, if you have a cash account and a non-margin account, you could avoid the pattern day trading rule. Again, I don't understand why some companies will or will not allow that. That to me is beyond my understanding. But but you'll be able to turn it off through the Robinhood platform I'm using, so you can make, according to them, infinite amount of trades on any amount, even if it's under $25,000. So there you go, and you have a cash. So that should work, Mark. All right, let us let us move on. Let us move on. All right, so that answered the screener. Roland, you're talking about entering orders. Um, so let me show you 2 different trades. So, for example, like, let me show you 3 different trades, right? So entering orders, Roland wants to know, like, how do you know how to enter the order? So like, for example, on an Intel yesterday, as I was giving you the example before, um, I would I would actually market order in on Intel options. Then there was another name. What was that silly Citron name in which we nailed the top in? It was Viva, right? It was Viva. Okay, let me show you how we called Viva. So we had an algorithmic trend line here. And so Citron came out, bashed Viva systems. We were looking to short it. I missed this entire move from 96.30 to 90.31, this $6 drop here. Most people would say the trade was over, right? But how did we make money? Why was it successful for us yesterday? So I waited. I was watching this rising wedge, and I noticed right over here when the stock broke through $95, I'm like, I'm buying Viva puts here, guys. The stock topped out. And then magically it topped out. And many of you guys were like, how did you call that? That was, and I'm going to answer your question. That was based on a simple trend line here. If you literally draw, I kid you not, the bottom of November 29th to November 30th, Monica, if they sign up for the room, do they get free access to my trend line class? I'm asking a question. I don't know. Do they get free access to that, Monica, if they sign up for the annual or any other moderator here? That's how I did it. I literally drew November 29th to November 30th bottom. Now you might ask, Mark, why did you draw that? Why did you draw that line? Oh, so you signed up today. Thank you for joining us, Steve. And you got the algo course included. So the algo course will explain to you why I drew that line. There was a reason, and I call it an algo trend line is because the robots use that level as resistance. So if you actually look, here, let me delete this on the 5 minute. If you actually look at the daily, that line I drew from November 20, there you go. Thank you, David. So there's an on-off toggle for pattern day trade protection on Robinhood. That's what I did, and it's under settings and account. Thank you so much. Okay, appreciate that. So if you actually use this line, let me just delete every line just to make it easy for you to see. So I'm deleting every single one of my trend lines now. Why do I call it algo trend lines? It's because the algos follow it. Now you might look at this and say, why the heck would you draw that line there? But you guys already know that I tend to draw lines correctly magically. I explained that through the Algo Trendline course. I can't go into a 3 hour course on it. But if you just draw that line right there, and you look at that line translated now in the 5 minute, this yellow line here going across, look at what happens. Viva breaks down, hits that line almost perfectly, and then drops and doesn't look back. So when we were in the room, we shorted it right over there. Because the name was running up into resistance. Now back to your question, Roland. I put in a limit bid order at $2 on the $90 puts. And yeah, we did well in them. You would have made some of you guys took the $95 puts and you actually ended up doing better, I thought, on the $95 puts. Because so in a case like that in Viva, when you're coming up to resistance and there's no sense of urgency to open up the trade, I put in a bid. I put in a bid on the puts. Now, since the stock was going up, the chance of me getting filled on a lower bid increases because the stock is going up. The value of the puts go down. So in the case like Viva, I would use a limit order roll-in. Now let's take the third trade that we did. Caterpillar puts right before the bell on Monday, and we plummeted the next day, even though Jim Cramer bolted up. So when I was looking at the Caterpillar puts here, at the end of the day, right here on Monday, before we obviously caught that beautiful down move, when I was looking at the Caterpillar puts for the overnight here, based on the methodology, I actually put in a limit bid because I knew Caterpillar was like this, and the bid was like 370 by 385, I believe, like $3.70 bid, 385 offer. I could have bought 385. Would have the trade worked? Heck yeah, it would have worked. But you know what I did there? I was like 370 by 385. I want to be the best bid. I bid 375. So I bid 375. And since Caterpillar was moving like this towards the close, I just waited for the stock to go up and my puts just got filled. So in that case, I used the limit order again. However, if I did not get filled on that limit order, Roland, I would have used a market order. Appreciate that, Mike. Thank you so much for spending your Wednesday here with us. And Monica and Max, means a lot to us here. Thank you. Bottom of my heart. Did that answer your questions, Roland? Does anybody have any questions on why I would use certain orders at different points? If you get it, great. Just say you got it. If you're cool, great. But I want questions based on that. I'm getting to everyone's question and more. I'm just flying through here. You'd have to take. Did you take my algo trendline class, Tommy? Overnight lotto. So don't do over. So in the future, Robert, we're doing not lottos. We're doing time value with spreads. So you'll know exactly what you're risking overnight ahead of time. So for example, if you're like, Robert, I want to risk $100, $200, you'd be able to set that up with a Caterpillar trade. And the Caterpillar trade was not lottos, by the way. We took December monthly puts. So you weren't going to get 100% crushed if it failed the next day. For example, playing devil's advocate, it obviously worked beyond phenomenally. But if it didn't work, you wouldn't have gotten crushed. Oh, just these trials. So the Algo Trendline course is like 3 to 4 hours where I describe which one you should use in different situations. I'll explain it all. I obviously can't get into a 3, 4 hour class about that now, but there is an answer to it. I promise you that. I don't want to be vague, of course. That's your answer. So a lotto is basically like it sounds like. When you go in the store and you spend $5 on lottery tickets, what do you do with them? You generally throw them in the garbage because they expire worthless. Same thing as in the stock market. You take very cheap option contracts and hope they move big. So if you took Caterpillar lottos, I think they were up like 4,000%. Yeah, maybe more. I think some of them were actually up like 10,000%. Think about that. So if you bet $1, you're up 4,000%. Think about what that means. For every dollar you bet, you're up four. So if you bet, $100 and you're up 4,000%, you're up 4 grand on $100 bet. That's a lottery ticket. You could do that, JW, or you could just accept the risk of 100% of the trade. Most traders are like, you should never risk 100% of your trade. You can as long as you could define what 100% is. If you're buying $100 worth of cheap options, which you think can move, where's your stop? What is your risk? My risk is $100. I'm either going, the worst case scenario, I'm going to lose $100. Crap hits the fan. Everything goes reverse. The whole world goes against me. I'm losing $100. You get to decide that before the trade is open. Awesome stuff, Tommy. I don't want to go into the algorithmic trendline course right now, Vincent. I want to answer the questions. Email me that question and I'll answer. I don't want to be vague either. Okay, let's move on. Hi, Holly. Position sizing. So Holly is asking here, get some of this organic black coffee. Oh, that's good. Mount Hagen coffee from Whole Foods. You can buy it on Amazon too. Good stuff. I can't even drink Starbucks anymore. Not to sound like a spoiled brat, but non-organic or inorganic coffee, non-organic, inorganic coffee doesn't work for me. Hmm. Uh, we already had a breakdown, and we're gonna have another break. Don't worry. And how can a stock? Uh, Thank you, Colton, from YouTube. Neva Hernandez. How can stock prices fall when volume increases by millions? That is actually what the robots do. That is actually how the robots are programmed, Neva. I'll just answer your question quickly. Take a look at any stock you are. I'll take a look at the spiders. Doesn't matter. Look at any stock on the daily. Notice something, Neva? That what are the bigger bars, the red or the green? I'll move my gorgeous, hard to look at mug over there. Look at the bottom. You see the volume here, Neva? Look at the big red volume bars. Big red, big red, big red, big red. And I'm not talking about the cinnamon chewing gum. Look. Look at the biggest bars in the market. They are generally red on average. They are generally red on average. That is because increased volume generally, not always, the majority of the time, short of bull flag formations, which we're going to teach you all about bull flag formations and more, are generally bearish. Thank you for asking. Robinhood does support options on cash accounts. I have a Robinhood account that has cash options. You just probably have to fill out whatever forms they're looking for. All right, Holly, position sizing. How do you know how large to take in terms of your positions? When it comes to options, it's a lot easier to do position sizing. So, for example, if you have a $10,000 account, and I'm going to teach you how it changes actually when you start pushing 10 million, because then our strategies have to change completely. And I'm going to go over that, I'll teach you what happens to you as you get to those numbers. But let's start small. 5,000, 10,000, 2,000, 1,000, 50,000, 25,000, $100,000 account. Anything from 1,000 to 100,000. Yeah, anything even from I don't want to say $100 account because That is a whole nother thing. So let's say you have a $10,000 account, right? And you're thinking, how do I position size? For me, you have to segregate strategies. So let's say your position sizing is for intraday trades. For me personally, everybody has a different risk tolerance, everybody has different goals, everybody has different parameters. You have to remember that. So position sizing will vary. How I would go about it. So I have a $10,000 account now, my charitable swing account over at Robinhood, and waiting. It's going to be fully funded tomorrow, obviously, or at least from what they claim on the notifications tab. And what am I going to do with this? Well, for me, my risk tolerance is going to be a 5%. Let's say it's 5%. What does that mean? I'm risking $500 of options per trade. So when it comes to position sizing, my position sizing is going to be based on a dollar amount, not a number of option contract amount. Why is a free trading platform critical for this strategy? Well, if I were to apply this strategy in Schwab, or you were, let's say you're paying $4.95 a trade plus $1 per option contract, which I think a dollar per option contract is very high. We're going to go into commission structures and how to take advantage of that for yourself or the way you trade. We're going to talk about that later, but I don't want to get too far into that right now, and maybe I'll cover it now. So, for example, if I were to take, you know, 5 option contracts at a dollar for my $500 risk. If I was doing it on Schwab, let's say it was $5 to enter, $5 to exit, it's going to cost me $10 right away. And if I'm paying, excuse me, a dollar per option contract and I'm buying 5 and selling 5, that's another $10. So just by opening up the trade, I have $20 in commissions. So on my 5 option contracts, I'm basically losing 4 cents on the options before the trade even begins. My cost is 4 cents higher. So if I paid a dollar for it, I didn't pay a dollar. I paid a dollar four for the contracts. That doesn't 4% doesn't sound like a lot. Maybe it does, but you just paid 4% more for the trade you wanted to do based on a commission structure. So the whole point of me doing it in Robinhood here was I knew it was a zero commission structure thing that I just saw on the internet. It was nothing personal. I obviously don't work or have any affiliation with the company. And what happened here on Robinhood is I knew we could all be in the same ground. So as a Newsbeat Live member, when you go through Twitter, wow, that's loud. It's great you can't hear it. When you go through Twitter and you go, or you're a Newsbeat Live member, which means you automatically get a valuable Twitter platform, I'll be tweeting the exact price I paid for any one of my positions. So you will know immediately win, lose, draw, fail, succeed, not succeed, whatever, you'll know immediately the price. The problem is in the past when I would give a price, sometimes I would sell out for a quick profit. Sometimes I would sell for a quick profit. Maybe it would go. Maybe my contracts would go from a dollar to a dollar five, and I would sell out real quick for a quick profit. Like, all right, trade's going against me. I want to get out of here. But there's some people who would lose money by buying at a dollar and selling at a dollar five when I would make money. That's going to cause psychological toxicity for you and psychological fortification for me. So how does that help when somebody has a much different commission structure than you? It doesn't. It allows some people to win and some people to fail. So the point of going here was to make sure that if you get the same prices as me when I enter and exit, you should have the same P&L as me when I enter and exit. If we are all in a, from mathematically speaking, in a zero commission structure account, which I will be sharing my entries, I will be sharing my exits. You know exactly where I'm selling and buying. So it'd be comparable if you were to follow me directly. You don't have to follow me directly. I wouldn't legally ever tell you to, but you'll have that information. Now, when it comes to your position sizing, back to the $10,000 account. it has to be based on dollar amount. So if I buy $500 of call spreads or $500 of put spreads, that's what I'm taking per trade. That is going to be my money management risk per trade. Now, sometimes in the room, we have breaking news plays, and you'll see me take 400, 500, 1,000, 1,500 option contracts. And all of a sudden, every option filter, like Option Monster, will go berserk. They'll have like I think the scientific term is a shit conniption. And it'll be like, oh my God, somebody's buying all these shit. And it's happening right here in this room. And that will happen. A lot of times, that's the combination of technical analysis and breaking news flow. On those trades, I'll tend to position size Holly a lot higher. On those position trades, I'll tend to go a lot higher on that. That is the exception for a rule. So there's a generalization, which is the dollar amount per trade, and there's this, I have a lot of conviction that this thing is going to work now, and I am going to buy every single thing out there that people are willing to sell to me. So those are the two differentiations in terms of, smaller accounts. If you're doing the overnight, I would try to stick with a simple dollar amount. If you're doing the intraday, I'd also stick with a simple dollar amount. What percentage are you comfortable risking? So let's say you have a $10,000 account. You say, Mark, I only want to risk $400 per trade, 4%. Take $400 worth of options. You're not going to lose more than $400 per trade, right? Zero commission structure, whatever, plus commissions if you're paying on a different platform. You get it. And that's how I would go about position sizing. Does that make sense to you guys? Yep, that's what happened to you, Eric. Exactly. You're playing too small on Street Smart Edge and it hurt. I'm with you. For me, I have a phenomenal commission rate. We're going to go into commission rates. And I know it's not the sexiest, thing that people out there like. I mean, all the brokerages out there, will not like me talking about this, but thankfully you're thankfully, we're going to share with you the right information and show you how you could utilize that to make money for yourself. I don't think there's ever been a Newsbeat game plan name ever that was priced under $2 this year, Robert, but thank you for sharing. Yeah. So like we're always focusing on large cap companies. If I'm trading a sub $10 name, what was the last sub $10 name I took? General Electric, when it's doing 300 million shares a day or something, 250, 273, 344, that's when we're trading sub $10 names, when we're trading the thickest name in the market, like multi-billion-dollar companies. Yeah. Okay. Questions? That makes sense to you, Holly? All right. So we are going to go on a very minor break till 12 o'clock p.m. That is a 9-minute break. We're going to give you a 9-minute break and grab a drink, use the bathroom, do whatever you need to do, and we'll be back. We'll be back shortly. The stream is continuing. We'll be back. All right. Thank you, guys. I am back. I am back, ladies and gentlemen, and got myself some more to drink. Is there whiskey or is there not whiskey in my morning cup? We'll let you decide that. No, I'm not drinking alcohol right now. All right, so we got into position sizing. Ken wants to talk about pair trading strategies now. And we're going to continue and we're going to talk about pair trading strategies. So I'll be the first to admit I'm not an expert at pair trading strategies, but I feel like the majority of them I've called out in the past have worked. Excuse me. And I think basically with the majority of pair trades, I mean, you could look for stocks with news where you buy one and short the other. Basically, Ken is looking for strategies where a pair trade is simply where you buy one stock and you short the other. And generally speaking, one of them will work out better than the other. Sometimes you make money in both, but the whole goal is to have one of them at least outperform the other so you make money, financially speaking, generally with equal dollar amounts on both sides. So if you bought $10,000 worth of Apple, for example, and then you shorted $10,000 worth of Facebook, for example, you would have been up a lot of money if you did this on July 25th. Because on July 25th, right over here, you could see that Apple, rallied up before pulling down. And Facebook on July 25th basically went straight down. So if you took a pairs trade with buying one and shorting the other, if you bought Apple and shorted Facebook, you would have been up a lot of money, even if you were down in Apple right now, because you would have been up so much on Facebook. With that being said, um, no, actually, Robinhood for me was actually the simplest account I've ever opened, and I have several different platforms. I don't really, you could start looking technically, I think is the best way to do it. Maybe utilizing some of our recent methodologies and try doing it like that, Ken, where I would, if you were trying to do like an indirect pairs trade, like maybe go long the strongest technical setup you see while going short the weakest technical setup you see, then it wouldn't even have to be news or sector related. There's, I mean, obviously an infinite amount of possibilities here when you do that. What you're going to notice though, Ken, from the Newsbeat live room, as obviously you're a long-term member. What you're going to notice is when we start doing these overnight trades that you're going to see longs and shorts. I'm going to be taking long trades and short trades, and that could be your pairs trade where I put the same amount of dollars long something and the same amount of dollars short something. So unintentionally, I will be doing pairs trades. And if you wanted to even it out where you take, one for one, so for every really strong bullish setup you see, you're taking one really bearish setup you see, you'll be able to apply naturally a pair trade strategy with what we're doing now. Questions? Anyone have any questions on that, on pairs trades? All right. Money management and risk management. All right, Ron. This is a really good question. When it comes to money management and risk management, and I want to talk about this one from the heart right here. When it comes to like money management and risk management, it's very easy for somebody to tell you what to do, or it's very easy for you to derive to a logical conclusion of what you should do. The problem I see with money and risk management is the math never adds in the human factor. The math will never the math will never um Hi, Jerry. Again, watch this service completely, and you're going to see more. And we're actually addressing people with accounts like that, and even smaller than that. So, money management and risk management is a very interesting thing. The problem is it never takes into account the human element. Now, what do I mean by that? It's easy for me to say buy a stock at $50 and buy a stock at $50 and set a stop at 49.75 and look to take profits, for example, look to take profits at at this price, for example, or something like that, where they'll tell you, it's very easy. You're risking one, you're making two. It's a good, it's a good risk reward, and you're basically going to be in a weird situation where you're unable to actually make money because not because you break the rules often, quite the contrary. You almost never break the rules, but that one time you do, you really ended up significantly hurting yourself. And that's the problem what I have noticed with traders who trade stock. The one thing in common I have noticed about traders, what do you think right now? It sounds funny. What is the one thing in common I have seen 30, 40, 50, 100, 70, 80,000 traders, 100,000 traders in my life, as being a broadcaster over all the years? What is the one thing in common I have noticed about everybody who blows up their account in a short amount of time? Like they're doing fine. They're hovering 100,000, 100,000, 100,000. Bang, their account's down to $18,000 in one fell swoop or in one quick week or in one day. What is one thing they all shared in common? Yes, it was one big loss, but what was one thing that they all shared in common? Anyone want to guess? Yeah, revenge trading, sure. They got greedy, their size, all true. They were all men. Believe it or not, no. Doubling in, that is true. Averaging down, that's true. But there's one thing they all shared in common. You ready for this one? You're all right. You're all right. You're all right. The one thing they all shared in common was that they were all trading common stock. What I have found, I don't have all the numbers with me, but I'm a math genius, so my guess here is not going to be too far off. I would say you have about a 97, 98% higher risk of doubling down into a strategy when you're trading common stock. We're talking intentional doubling, not keyboard error or that aside. They were all trading common stock. When you trade common stock, the problem is the following. Let's say you buy 1,000 shares at $50. You think the stock is going to $51. If the stock goes up, you're fine. If you bought options in the stock, you're fine. The stock's going with you. Let's take the flip side of that coin. Let's say the stock goes against you. Let's say you bought it. How many times, and it doesn't happen always, but how many times have you guys bought a stock and immediately the stock rips against you like as you buy it? How often has that happened to you guys? Raise your hand if that happens to you. Where you buy a stock, and I'm not saying it goes from $50 to $49.95. I'm saying you bought it, or excuse me, $100 to $99.95. Let's say you bought a stock at $100 and immediately, bang, 99.70, 99.60. Vince, how many times? You know what you do when you're in options in that scenario? Ah, damn it. Should I hold? Should I dump? Should I hold? Should I dump? You know what you do when you're in common stock there? Exactly, Rachel. You do nothing when you're in options. You know what you do when you're in common stock? Should I double in? I don't want to take this loss here. I just got an unlucky entry and they're offering me a better price. I got to go in right now. I'm going to buy a little more here. Or I'm going to do nothing. The 9 times you do nothing, you're fine. The one time you decided to double in is where you get potentially screwed. Right? The psychology behind common shares is here's the problem. When you buy 500 shares of a stock at $100 in my example, you really don't know how much you're risking. You could tell yourself as much as you want that I'm risking, 50 cents or 25 cents. You could tell yourself that, and usually you will be right. But what about the times where you buy something and it flushes right away, and now you're down money and the stock is trading below where you thought it would go? Now you're in a situation where you have an open position and you don't know what to do. If you double in, you could blow up your account or take even a larger loss potentially. If you don't double in, you have to wait for the stock to go all the way back up to where you bought it. And if you sit there and you hold it and you do nothing, it could still go down and cost you more and more and more. The problem is when you buy 500 shares of a $100 stock, you have $50,000 worth of risk. Now, very unlikely it goes from $100 to zero, but I have seen it go from $100 to $95, $94, $93. And by the time you're sitting there watching it go down, your 500 share position might have turned into a 2,500 share position, a 3,000 share position, where now you're only down $1.50 on 3,000 shares as that stock is going against you, praying to God. I promise I'll go to church, synagogue, wherever, whatever, whomever you believe in. I promise just let it go up this one time. And then you start talking to the person or entity or whatever you believe in upstairs, and you start having a conversation with that person. That's how you know you screwed up. That's how you know you screwed up. And you know you screwed up. You're in the position, you know you screwed up. How the hell did this happen? Oh my God, I was trading so good up until this point. I was making money consistently up until this point. But right now is that time where all of a sudden you blew up. Does that sound familiar? Praying, adding, your 500 share position turns into 2,500, 3,000. Does that sound familiar to any of you? Am I making this up? How funny. What a weird, broad generalization that, as you're saying, Vincent, is spot on. How funny is that? Or not funny, that I could almost walk you through that entire moment of your life without knowing you or watching you trade. The difference is when you're in options, you're already comfortable with your loss no matter what happens. Or you should be. So if you buy $2,000 worth of options, be prepared to lose $2,000. When you buy 1,000 shares of a $100 stock, you have no idea what you're really risking, no matter what you tell yourself, because you have $100,000 worth of stock on the table as opposed to $2,000 worth of options. See the difference? The one common thing that people have when they blow up is common stock. And you have to fight those urges to double in and take the loss. And I would say the majority of you will do that the majority of the time. But as human beings, we will all slip up. When you do options, that is the only true way to know what you are risking without blowing up. So when I'm in $2,000 worth of options in my example, let's say the stock goes down 99.70, 99.40, 99.20, I'll say, oh, screw this shit. I'm out. I'm taking my my $600 loss here. Blah, forget it. I'm out. That's what it feels like. When you're in 1,000 shares of stock and it drops to 99.20 and you're down the same amount of money as I am, you still don't know how much money you could lose. So when you're actually sitting there deciding to hold, oh, I'm gonna get squeezed out here. I don't know, could drop further. You're in a weird situation. You're in panic mode. Now, if my stock drops 80 cents and I'm in $2,000 worth of options and I'm down 700-800 bucks, I could say screw it, screw you, flip the bird towards the market and say I'm just gonna sit here. And I will lose this $2,000 if I am absolutely wrong, and I'll sit there and I will watch the market and I'll say, okay, do whatever the heck you want. I don't care. I'm going to sit here and I'm going to watch. You do not have that luxury when you're in common shares. So when I first started trading, I was, back in 99, I made over $1 million in my first year just with common stock, buying and selling 500 shares on the bid and offer with a 500 share maximum position size. Buy, sell, buy, sell, buy, sell, buy, sell, buy, sell. $1 million plus, 1.1 million in my first year. Then it got hard. Then I was trying to make, if I made a quarter million or 300,000 or had $100,000 year and then had a $37,000 year. And then all of a sudden it changed. The way I got from making seven figures to not making seven figures back to making seven figures, making seven figures, making seven figures is by switching to options because I understand the risk management. And I brought in 1 year a $50,000 trading account to well over a million in 1 year trading options. And you want to know what? I was never risking more than 10%, probably less, probably it's closer to 7, 8% of my account at any given moment. You think I was going like all in, making money, all in, no, who the hell does that? We're talking proper risk parameters. So with that being said, the main reason why I see traders losing money is because they get sucked in stocks. Now, with all this being true, do you find it interesting? Do you find it interesting, Ron, on risk management, why if you go to any firm, they'll rarely even talk about options. They'll talk to you about common stock. The reason why I think that happens is it's less complex, which I don't really find it that much less complex. I think option trading could be as easy as you make it. Hence, me as an embodiment and living example, the way I don't still know the option Greeks to this day, and I've made millions of dollars trading options without knowing the Greeks. Laugh, get get it out. Laugh it out of your system. All you option traders out there, laugh your asses off right now. Laugh. Go ahead and laugh. Laugh it out. I'll wait. I'll have some coffee. All right. And there you go. Whether it was 500, 5,000, 50,000, 500,000 Don, that same 50%. Kyriakos is like, but wait, so we actually have people who are from Greece here who are like, I'm Greek. Do you not get me, Mark? I get you, just not the option side. So why do these firms only talk about common stocks? One, they're easier to explain. Two, they make more money on it when you trade it. You're more likely to trade heavy when it comes to stocks and make your broker absolutely fall in love with you. Your broker is going to be like, like when you watch the cartoon and they have like two hearts in their eyes and you see the two big hearts. That's how your brokers look at you when you're sitting there scalping stock all day. I know. I know as a trader who is doing consecutive 10 million plus share months, 10 million shares a month, 10 million shares a month. My broker would bend over backwards for me. It's one of those things where if I asked my broker for anything, they would be there. But then with options, at least from one brokerage told me, I can't speak on behalf of all brokers, as I am, I do know a person or two or 100 or 1,000. They tell me that they make a lot less money on you trading options than you trading stock. So, why offer a product that's harder to explain, which options are? They're not harder to use, in my opinion, but they are harder to explain. And if you look anywhere, notice options have so much more risk than stock, they'll tell you. That's half true and half wrong. Anybody who says options are more risky than stock, tell them they're full of it and walk away and never listen to anything they tell you ever again. Options are only as risky as you make it. Stocks are psychologically infinitely times more risky than options. Yes, is $100,000 worth of Apple stock less risky than $100,000 worth of options in Apple? Without a doubt, 100 million% yes. But the difference with options is you can choose your true loss before it actually happens. So you will know what you are losing before you put on the trade. That is rarely the case with stock. Yes, it could usually be the case with stock, but usually isn't going to cut it when you're making 200, making 500, making 200, making 500, and then you're down 6, 7 grand the next day. That doesn't help, you know. Dance with the devil at your own risk. Dance with the devil at your own risk, ladies and gentlemen. You want to tell yourself you're psychologically ready to trade the market. You want to tell yourself that you're going to take a quick loss on your stock. You probably will the majority of times. The one, two, three times you don't, or the one, two, three times you're putting yourself at risk to blow up your entire account. You want to do that? I've done that before. Okay. All right. So when it comes to risk management, do you have any questions on that, Ron? That makes sense to you? We're going to move on. Okay. All right. All right. Yeah, so many people are having issues with the room here. Is that it? Is that the right link on YouTube? All right. So we're going to go into fear and mental toxicity, ladies and gentlemen. We're going to go into fear when I feel like it, Arcady. Maybe on a single day, I'll want to take the loss fast, Arcady. Maybe on another day, I'm going to be a stubborn SOB and want to hold that thing as long as I can. The truth is, both days will happen when I'm in a position. Both days will happen when you're in a position. The only difference is when you're in options, you know how much you're going to lose, and when you're in stock, you don't know that number. That's the difference. Um, could you moderators out there email the proper protocol, the proper channels through T3 and say a plethora of people are having issues here. I don't know if it's a server capacity issue. I know the Newsbeat live room is exploding, but like obviously it needs to be addressed. All right. Fear and mental toxicity. Mental toxicity is very simply done. This subject is really quick. Fear and mental toxicity are are basically done or acclimated. There's a part of your brain, the amygdala, it stores there. It's done by losing on trades. Losing, there was a scientific study, the amygdala, it usually is the size of a walnut, stores every bad thing you've ever done. You stuck your finger in an electric socket, you got hurt, you fell off a bike, someone that hurt you emotionally, whatever it is, it stores in that part of your brain, which is meant to protect you from that feeling in the future and always remind you to stay away. Losing on a trade creates that as well. So there was a scientific study done on the size of the amygdala of day traders, and they found out that not day traders, excuse me, brokers, traders, people like that, people involved in the market, day traders too, and they found that their size of their amygdalas were 2 to 2.5 times larger than average because you're storing all that psychological and mental toxicity. Instead of describing what it is, which you guys already know, I'm going to tell you how to get over it. You have to make money consistently. Being right is more important than making money. You want to make good money? You want to know how multi-million dollar traders make money? Besides for the one person who got lucky buying one stock and making a lot of money, besides for that, those few people to do it as a active trader, you can't care about how much money you make. It's all about being right. That is the only important thing in the market is being correct. I don't care how much money it is, that number will change for the better. That number will always go up. Whether you're making 1,000, 10,000, 100,000, $1,000,000 a month, you're going to all that matters is that you're right. And if you focus on that, the money will come. So to get rid of mental toxicity, you have to apply consistent strategies that work that help you make money. That help you make money. Appreciate that, Jim. So that's how you genuinely cure mental toxicity. Now, of course, there's other things and exercises we talk about, which I offer in the Newsbeat Masterclass. Shameless promotion. I'm not going to go through hours of that right now, but that would be the first step I would use. Is first thing, start winning, start being right when you trade, and that's the first way of curing it. Appreciate that, Tommy. Thank you. All right, Art. We're gonna questions real quick. Yes, Lou. Until you could regain your confidence, absolutely. So Lou's asking, what if you're gun shy now? Because like from the past, from things that happened in the past, from like bad trading, you could go back to paper trading or just trade really small. Because even if you trade really small, you're going to get your confidence up. Even if you trade really small, it's not about the money you make. You'll build your confidence up. If you can make money, you can make money. If you can't make money, you can't make money. You will know right away. That's exactly the answer. Count sizing? Yes, we are going to get into that, Jerry. Thanks for the shameless promotion, Kyriakos. Find someone that's a winning trader and trade with them. Thank you. Okay, we move on. See, not all questions are going to delve that deep. So, managing multiple positions are the easiest way to manage multiple positions in the market is to be in options. The reason why is if you have 1,000 shares of long this, 1,000 shares short that, 5,000 shares long of this, 800 shares short of that, 700 shares of this, 600 shares of that, there are people who could do it out there. Very few people could do it out there. Those are machines. That is somebody who is a machine. There are people out there who are machines. I'm a machine. I could do it. I'm sure there are plenty of others. The majority of people cannot do that. The majority of people cannot do that. The easiest way to manage multiple positions is to know the maximum you're going to lose on every position of every single one of them is wrong. You know how you do that, Art? Options. Imagine holding overnight all these shares. One day you're bound to blow up. Just one day. You're short this, you're long that, you're short this, long that. Might not happen for a year or a month or 2 years or 3 years, but that one day where you're short 2,000 shares of this and some idiot comes out or dumb company and buys out your company and it shoots up 5, 6, 7, 8, 900% and you blow up your account. That happens with people who are um, in the wrong position, swinging multiple stock positions. That's why the easiest way to manage multiple positions, just being a bunch of multiple option positions, especially spreads. And that's what we're going to do with our swing account. That makes sense to you, Art? You were short Kronos, James, through common stock, or were you long Kronos through common stock? All right. All right. So there. Psychology post trade, Eric. He wants to talk about when you're in a trade and you open it up, what is the psychology? Two different psychologies. Two different psychologies. When you buy stock, your psychology is, I better watch the stock like this. And you can't move. You're sitting there, you're in a position, and you can only focus on the position. You can't look at a broadcast. You can only look at the chart and the stock, and you're focused in like this. When you're in an option trade, hey, what do you guys think of it here? Oh, all right, you're like, oh, I need to use the bathroom. Less stress. So the psychology for post trade is if you're in a stock, do not ever leave your computer seat while you're in that trade. If you're in options, still try not to, but it's okay if you do. You know what you're going to lose if you're wrong. So psychology post trade is negatively hampered in a stock position as opposed to an option position, and that's something I learned. A lot of people learned the hard way. If I was option trading my entire life, I'd probably be a billionaire by now. Of course, I tell myself that. There are stocks that I've watched back in the heyday, and I called it going from like $20 to $80, and stocks like Plug Power. Remember that silly company? And if I was in options, I'd have multi-million dollar days, multi-million dollar days, $10 million weeks. I don't want to think about it. I'm here where I am now. All right. Rich. Rich is asking, not pressing buttons when you shouldn't. Haha. Excellent question, Rich. How do you not press buttons when you shouldn't? How many of you are trading when you shouldn't? So, one of the things I do in the Newsbeat live room, let's see if we can pull that up again. One of the things, one of the things I do here in the Newsbeat live room is I try to shut up when trading isn't good. The problem is traders have CNBC on, they're in a trading room that is active, which they think is good. Active trading rooms are good when you should be active, and they're phenomenally detrimental when you shouldn't be active. Don't confuse activeness with value. So what I try to do throughout the day is like, guys, I only did one trade today, two trades today, three trades today, two trades today, zero trades, one trade. Guys, I'm sitting on my hands. It's after 11 o'clock, ladies and gentlemen. The market is tailing off here. Your risk reward is extremely skewed. Either wait for a huge news headline or don't touch anything. We do that in the Newsbeat live room. We try to prevent traders from pressing buttons. Now, again, your brokerages won't like that because they want you to trade as many shares as possible. That's how they make their money. If your brokerages actually gave a crap about your bottom line P&L, they would tell you that the vast majority of traders lose money between 11 o'clock a.m. and 2:30 p.m. Eastern Standard Time. I have seen the prop reports. I have seen countless prop traders. I have seen countless traders. I have broken it down with their time frames when they're making money and losing money. I think it was like 92% of traders that I saw with and I had a relatively good sample size, not a million trader sample size, but I had thousands of traders with a sample size. 92% of them lost money between 11 o'clock a.m. Eastern Standard Time and 2:30 p.m. Eastern Standard Time. Why is that? Why can the majority of traders just not make money during that time? Who cares? Is it because of lunchtime? Because things slow down? Sure. Maybe because of this, maybe because of that, maybe because the big institutional money isn't coming in at the middle of the day. You can make all the excuses you want. The bottom line fact is that trading during certain hours are bad. And we completely will rub off on you, Rich, by not pressing buttons when you shouldn't if you are surrounding yourself with traders that aren't pushing buttons all the time. So yes, we do have traders in the room who are trading intraday during those times. Don't think like the whole room shuts down. But we are definitely in careful mode. And sometimes in certain markets, you are getting action after 12. Yesterday being a perfect example of that when news came out that Brexit, that Theresa May's Brexit deal was going to fall through. And you saw after 12 o'clock, they posted it and the market collapsed after 12 o'clock. And that's why the market collapsed here. That's the exception. So you want to know how you not press buttons when you shouldn't? Shameless promotion, follow the Newsbeat live room. We are all about not trading when you shouldn't. We are all about that here. And surround yourself with people who are making money doing that for a living. And surround yourself with people who are not just trying to throw empty ideas at your face and hoping that some stick. Follow traders that are not giving you 30 trading ideas, trying to have you figure out which one you should and shouldn't take. Have it where the broadcaster is telling you exactly which one they're taking in real time and which ones they're not taking in real time when they don't announce a trade. Follow that broadcaster if he's right 7 out of 10 times. Follow that broadcaster if you feel you could grow with him. Follow that trading guru, whoever it is. Surround yourself with people who are doing just that. That's how you not press the buttons when you shouldn't. Sal, how do you tell bull or bear flags? All right, give me one hot second here. Give me one hot second here. And we're going to discuss bull and bear flags. We're going to discuss it all. All right. Not this one. This one. Just trying to find the right one. Just 1 second. I'm going to pull up files for you guys here. Let's see. Trader Summit. Just give me one moment. I'm just trying to find Masterclass. All right. Let's share with you guys. Let's do a nice presentation here on bull and bear flags. Okay. Give me one more moment. All right. All right. The screen is going to go black just for a second because I'm going to share something new with you. All right. All right. There we go. Bull and bear flags in the eyes of Mark Melnick. All right. Let's talk about bull and bear flags. And this is for Sal. What is a bull flag? And I'm going to breeze through this real quick. We're not going to spend a lot of time, but I will be very explanational. A bull flag results of a rise in a stock and then a consolidation, and it often results in a powerful rally. Most of you guys know that. And the move is often the length of the prior flagpole. On the bear flag, it's the exact opposite. The stock falls down, consolidates, it often results in a major drop afterward, and the move of that drop is often the length of the prior flagpole. 3 kinds of wedges, maybe you didn't know this, that I follow on bull and bear flags. The first is a falling wedge, which I consider bullish. A falling wedge it doesn't matter what time frame you're using, works on every time frame. A falling wedge is bullish. It has lower highs and flat to lower lows. In English, when you draw a resistance trend line, it's steeper than the support line. When you have a rising wedge, it's bearish. You have higher lows on your candlestick and flat to higher highs. The support is on a steeper curve, is steeper than the resistance line. When you have a triangle wedge, it's neutral and it takes conviction from the flag. So if you have a triangle wedge and it's off of a bull flagpole, it's bullish. If it's coming a triangle wedge off a bear flagpole, you're bearish. So what does a falling wedge look like when I say, lower high, whatever, lower lows, or this pattern for me is most effective right here when coming off of a bull flagpole. Generally, you're going to see volume continue to drop as the wedge formation continues. Volume is elevated as either one of those trend lines, those red lines you see, break. And that's what a falling wedge looks like. So here's an example of a falling wedge. And you'll notice that the highs are getting lower and steeper on the upper trend lines. You'll realize the lower line, the lows are getting lower, but it's not as steep. The curvature of the angle on that top red line is deeper than the curvature of the angle on the bottom line. As soon as that line was ready to break, right over here, you could see it continued up. That is obviously a working example of a bull flag falling wedge. Now, here are ones that we caught in the Newsbeat live room. Here's Acogen, and we were able to call this was one of our swing long plays that a lot of us did well on. You notice right here was the flagpole. Let's see if I could even zoom in on that for you guys. Can we zoom in? There we go. There we go. So you could see right over here, we have the flagpole, which is that big green line over here, and then it digested on the falling wedge. You see the falling triangle right there. And that is important to note. And then when it's ready to break out again, you see it was able to finally take off. So this is a rising wedge. This is the most bearish wedge after a downtrend. So step one, you see the steeper the lower line indicates that traders are trying to be bullish right here. You see that red line? They're trying to be bullish. However, when you look at the top, the lack of similar steepness in the upper line indicates a failure of the bullish sentiment. Result, the price fails to reverse for an uptrend and the downtrend continues. That is textbook bear flag rising wedge, or at least my interpretation of it. And here's a weekly chart of the Euro US dollar. One could easily observe that a good short entry on this rising wedge would be the resistance line right here with swing puts. So if you were trying to enter, you could, enter it short, or if you're trading a stock with puts on this top resistance line here of a rising wedge. Here's where we were calling the bearishness of the spiders before it dropped. And you'll notice right here, there was a bear flagpole. The wedge rose, and then when the spiders were finally ready to break down here, it resolved, and you had a bear flag resolution in the spiders right over there. So when it comes to the triangle wedge or symmetrical wedge pattern, this is basically what it looks like. You basically have what's called a triangle, and it comes to the end where it's called a zenith, where you basically see um, the digestive pattern or the digestion or the consolidation, it's all synonymous with each other. Get tighter and tighter and tighter and tighter, and then it breaks up or breaks down. So if this was a bull flag behind it, I would look for it to break up. And if it was a bear flag behind it, I would look for it to break down, Sal. And here's just some triangle wedges. Here's a bull flag, resolves up, or a bull pennant, whatever you want to call it, bear pennant, bull flag, they're all synonymous. Here's a bull flag, triangle wedge, resolves up. Here's a bear flag, triangle wedge, resolves down, bull flag, resolves up. You see how the triangle wedge generally gives you follow through based on the flagpole. So here's a bull flagpole. Here's one that we caught in Riot. And you see when crypto was hot, you had the bull flagpole here, it digested in a falling wedge, and then Riot exploded on a bull flag continuation pattern right here. Put in another bull flagpole. You'll notice like the high volume on the flagpole in orange down here. You'll notice the low volume on the digestive pattern. Notice that? Just make sure you notice that. So you shoot up here, you digest again, and then you continue off again on another bull flag continuation pattern. One of the one of the things one of the things one of the most amazing one of the most amazing traders I've saw catch bull flag formations and continuation patterns was actually T3's Mark Sperling. And he did it when I was early in the firm back in 07, 08. And he did it with AIG back in 07, 08 when AIG was, I mean, there are many splits in AIG, so it might be hard to see it here. But basically, he was playing daily. I can't pull it up because it happened so long ago. Basically, what Sperling was doing was he was absolutely destroying the bull flag formations on AIG. And he was absolutely just buying on the digest. And this was, I wouldn't consider myself a new trader back then. I had 9 years experience, but I definitely had less than I did today. And he was just playing the bull flag digestive patterns with heavy share size and just boom, and it explodes up. And it was just one of the most phenomenal things I've ever seen um, as a trader to watch Mark Sperling take advantage of those daily AIG bull flags back in, what was it, 07, 08, maybe early 09, maybe all three. It was one of the most phenomenal things I've ever witnessed as a trader. He became my hero. And just for one more example here, you see letter W, Wayfair with the bear flag and rising wedge pattern. And you see you have the bear flagpole here. You put in the rising wedge. Notice the bottom is curved steeper than the top. Bear flag continuation pattern. You see the elevated volume of how it looks like when it goes. That, Sal, is what a bull and bear flag is to me. I'm going to move on. If you have any questions about that, I'm not even going to ask in chat. You're welcome, Ronald. Email me, mark.melnick at t3live.com. I'll be happy to answer your questions. But we are moving on, ladies and gentlemen, because we still have a lot of great stuff to offer you. All right. Switching time frames. Everybody says, one time frame is bullish, one time frame is bearish. Fine. The truth is, even though I can easily correlate things between time frames, the truth is if you're sitting there waiting for all your time frames to look bullish, I'll find that you usually won't find any trades. Yes, it's nice when your daily chart is bearish, and your weekly chart is bearish, and your yearly chart is bearish, and your 1 minute chart is bearish, and your 5 minute chart is bearish, and your 15 and your hourly. So where do you short? I don't know. At day lows? The problem with combining time frames on the intraday level, the problem with it is the methodology doesn't tell you where to enter. It just tells you, all right, this is bearish, that's bearish, that's bearish, that's bearish. Looking for time frames. So in the morning, I'll focus on the 1 minute because those are the best indication of what happened intraday for me. Then as the day goes on, I'll switch to 5 minute because the 1 minute becomes less important. That's how I switch time frames throughout the day. I'll go from 1 to 5, and I'll always have the 15-minute, hourly, and daily up that I'm watching. When it comes to switching time frames to look for time frame continuity and things like that, it's fine. There's nothing wrong with it. I'm not bashing it at all. But I will say that it's generally used for stock selection. So here's a 5 minute bearish formation. There's a 5 minute bearish formation. There's a 5 minute bearish formation, and three names you're watching, for example. Then you'll switch to the daily chart and say, which one's more bearish on the daily? And which one's more bearish on the 15 minute? Which one's more bearish on the hourly? And if you say, all right, that one is more bearish on the daily than all the others, so that's the one I'm going to short, I have never seen any empirical or statistical data that says that that would work better for an intraday trade. On the swing, it's totally different. Then you have to use the daily. But for an intraday trade, I've never seen any statistical or empirical data that would support saying that you are more likely to make money when you have a bearish daily, um, on three, more bearish than another stock on the daily, in your opinion. I've never seen that. So when it comes to switching time frames, that's how I switch them. I just focus more on the 1 minute early on, then I go to the 5, then the 15, then the hourly, and then I move forward. Moving on. And if you have any questions on these, mark.melnick at t3live.com. Taking quick profits versus holding losses. So as I was saying before, Lee, I always take quick profits, except on my swing trades. Intraday, let's talk intraday. I always take quick profits. Why? Because I only care about being right. I don't care where my stock coulda, shoulda, woulda went. So you think when I took, for example, even on the overnight, like Caterpillar puts, we took the day before, and you saw the stock tumble here. Do you think I really was crying myself when I caught when I was in Caterpillar after a 4 point drop and I might have missed another 6 point drop in Caterpillar? You think that bothered me at all? Not the slightest bit. You know how much psychological toxicity I suffered? Zero. Psychological fortification. Now I feel better. Now I have more confidence in my next trade. What if I was up $4 in Caterpillar and then it shot up and I was down money? I would feel like garbage. It's not worth it. So when it comes to taking quick profits versus trading versus holding losers, lock it in. Always know where you're more likely to be up money initially. The majority of traders, when they actually open up a trade, Lee, the vast majority, there is no ideal time, so um, I'll get to those. Please just I'll answer. You know what? If you guys can, if you want, either I'll do a Q&A at the end of this, but um, no, Monica, I'm also posting my morning game plan through Twitter and thoughts. At the moment, the intraday stuff, we're not posting quick intraday trades. Sometimes they're longer, sometimes they're not. It would be impossible. Don't want to get off topic here. Too many questions. All right. So Lee, on taking quick profits versus holding losers, the trick is to always take money. So as I gave before my example, if you bought contracts at $1 and you think they could go to $2 and you sold some at $1.10, $1.20, $1.25, $1.30, that's fine. Always try to get to the point where you're on the house's money. And if the trade goes against you and you throw it away for a quick loss, you're good. Sam, significance in pre-market. So the significance in the pre-market to me is volume. Volume shows me how many traders are going to be really watching it throughout the day, generally speaking, when I'm looking at a stock in a pre-market. Also, A plus trigger methodology, which I don't want to go through today. I have an entire thing with the Melnick A plus trigger methodology that I do go through throughout the day. And it literally, goes through my entire formula and shows examples. I don't want to go through that today because that would take a little longer to go through. But my A plus trigger methodology, and it's a methodology we invented here. You found it here first. Um, does work in the pre-market. So the only significance I 99% of the time use Sam in the pre-market is just the pre-market volume in a name, and that tends to judge my intraday post-market open conviction. All right, so we went over the one and done in Intel. So I already answered that one, Ramesh. Position sizes, I already answered that, Alejandro. See, a lot of the stuff we talk about already answered, so I'm flying through here. Platform setup, already went through that, Jim. If you are an active Newsbeat, I won't be doing it up until Saturday because I don't want to just keep, sending here, sending. I'd rather take it all care at once. If you are a Newsbeat Live member, and again, for compliance purposes and whatnot, you have to be a member. I'm sorry if you are just, not going to sign up for the free open house, which a lot of you are already doing right now. And thank you for showing faith in us. Or a lot of you are on YouTube or Facebook watching right now. I can't share my exact layout, but I actually have a file where I share, if you use Street Smart Edge, my exact layout. So when it comes to platform setup, there is more value I want to bring you here, so I could still help you potentially, even if I'm not trading on your setup. And what we do, what you need to do is you have to have your setup designed to allow you to buy and sell as effectively and quickly as possible. Whatever that is, whether it's through hotkeys, whether it's through, I'll tell you one person, and again, I can never recommend you to do or not do anything. That's up to you. But one person, for example, on their, what is that called? Interactive brokers, are you sure? There's like a trade confirmation button after you place a trade. Are you sure you want to do this trade at this price and this, and it requires an extra step? Some people remove that. Yes, you're risking that you could put in a wrong trade and you might do a trade you don't want, or you could be faster on every single one of your trades. So that's one way of doing it. And your platform setup should allow you to enter and exit a trade with as few actions as possible. So how many actions did it take me to buy 100 options in AMD? AMD, enter, left click. 5 actions. 5 actions. Very quick because it's like AMD, enter, left click. I mean, I could do it in a second, right? You should have as few actions as possible to accomplish what you want, and that is the proper way, in my humble uh, professional gaming opinion, of how you should set up your keyboard, Jim. Done. Wide options on open. So that's a good one. So Don is basically Don is basic, and there's so many Dons here. So Don W is asking wide spreads on the option open. So a lot of times when a market opens, the option spreads are very large and then they slowly tighten throughout the day. The best thing I could say is apply exactly what I was saying before. Like if there's a wide option spread, sometimes just pass on it. A lot of times it's easier to trade stock than options in the morning as long as you're disciplined. But going back to what we said, generally I will wait for the options to tighten up or try to get filled on a limit order. That's what I do with widespread options on the open. Carl, hey Carl, you want to know if a market is good or it's going to have a good or bad day? That is a very interesting question because I get asked that a lot because it seems like Mark, you always know when the market is going to be good and conducive for trading. That has happened much later in my career. What I simply do is the following. I first look at the technical setup in the market, and how I know it's going to be a good or bad day is the easiest thing I do is I go into the analyst recommendations on Fly on the Wall. I'll move my mug over there to the right, and I'll literally look at what the analysts are saying. And I go through every single analyst note here on a simple, cheap service as Fly on the Wall. I have more complex news platforms that I use for other purposes, but when it comes to answering your question, is the market going to be good or bad? I basically look and say, how many analysts are opening their mouths today? Because that's where all the institutional money comes from. Deutsche Bank, Jefferies, Lehman, um, which is now Barclays, obviously, MKM Partners, Morgan Stanley, Goldman Sachs, UBS Warburg, Oppenheimer. When their analysts are upgrading or downgrading stocks, it's going to be a great day for trading. When everybody is hiding under the table because the market's been falling, the market is going to suck. And that is how I am right over 95% of the time, easily, if not more, on whether or not the market is going to have a good or bad trading day. Now, why is that important? Let me just move my mug back. Why is that important to know if the market's going to have a good or bad trading day? Because we all know, ladies and gentlemen, that every market day is not created equal. And if you're coming in trying the same stuff on the same technical formations every single day, your results are going to vary tremendously. And you're going to not understand why the same setup on one day didn't work and the same setup on another day worked out great. And you're not going to understand it, and it's going to cause a chaotic flux inside your brain where your brain can't really determine confidently what day it pays to take size and what day it pays to hit the brakes as opposed to hitting the gas pedal. And that's how I do it, Carl. And it's been working out phenomenally consistently here in the Newsbeat live room. All right, Marty. See how I'm breezing by questions, and then we're going to get into we're we're at the tail end. We're almost done here, and then I'm going to share with you how to develop your own strategies and how to add to it. It's going to be so good. Algo or technical analysis? Well, it's really there is no such thing to me really as technical analysis. What do I mean? Of course there's technical analysis. I use it. I'm a technician. So what do I mean when there's no such thing as technical analysis? Well, because depending on who you ask, 90% or more of the volume is done by robots. Nobody will say it's less than 50 unless they're imbeciles, of course, and completely delusional to the way the stock market works. The robots, algorithmic programs do the majority of volume in the market. Fact. Everybody has accepted that fact, whether it's 80 or 70 or 75 or 95 or 90%, nobody knows. So because robots are doing the majority of volume in the market, it would be safe to say, it would be safe to say that it's algorithmic analysis because the algorithms or robots are the ones who are buying and selling. That is the technicality. When you actually interpret it using my trendline methodology, which is being, I think, offered for free. I think T3 is doing some big deal because of, nobody could have predicted that you guys were going to get a day off, even though this day off might be the best day for you because I'm going over questions. But, your Newsbeat 5-day trial was, cut to 4 because today was announced as a national holiday, as you know, for the passing of George H.W. Bush. So that's why we're doing this today. So there's some big deal. But if you look at my algo lines, there are traders in the Newsbeat live room who will only trade stocks based off my algorithmic levels, and they are making money consistently. Isn't it funny how a lot of times we're calling the dead top or bottom of a stock utilizing our algorithmic levels? Do you find that funny when I share with you these algo levels, for example? And I said these levels were for December 5th. That's actually where I screwed up. These levels should be for December 6th for tomorrow, by the way. So there. It is going to confuse me just a little that today was no trading. Isn't it funny when I give you levels on some of the biggest instruments on Wall Street? Qs, spiders, IWM, Facebook, Apple, Amazon, Netflix, Google. That a lot of times, not every time, most of the time these levels don't hit, but when they do, a lot of times these levels represent the high or low of the day, sometimes within pennies. Is that a coincidence that I'm able to do that by just drawing a trend line? Of course it isn't. And that's why I consider it an algorithmic trendline class. And that's why you see my chart looks like Spider-Man got drunk and was, tripping on something and, shot his spidey web all over my monitor. Robots are trading the market. So if you're asking if it's algo or technical analysis, Marty, really, technical analysis, in my opinion, should be the actions of interpreting the actions of what the robots are going to do ahead of time. You should be able to predict in the future where a robot is likely to buy or sell a security because they will be doing the most of the volume and will have the biggest influence over you. You're not moving Apple. I'm not moving Apple. We're not moving Apple. The robots are going to move Apple. So, for example, just using Apple as an example here, you know, so how do you know what to do with Apple, Mark? Well, if we know where the robots are buying and selling ahead of time, hence why when I give you my algo levels, they're for the next trading day. They're for the next trading day. So we're looking at these levels for tomorrow. We can interpret and react accordingly. So, for example, if I see one, so on Apple I have resistance at 180.24. Let's take the Apple resistance, right? People think the market's going to gap up after the China comment. So if I see Apple shooting towards 180.24, I know the vast majority of the time, if I start buying puts at Apple when it gets to and maybe even breaks a little 180.24, I am usually going to make money. Isn't that incredible? So to answer you, Marty, it's the same thing. You could call it algo analysis. You could call it technical analysis. You could call it Susan if you would like, but it all equates to the same thing. Okay. Gaps are picked up by Robot Smarty, to answer your question. Neva Hernandez, how to not lose money. The best way I could say of how to not lose money is don't overtrade. Shameless promotion. We don't ever. One of the things we're famous for is giving you quality over quantity. Um, I don't overtrade ever anymore. I used to do it all the time. I did it for 15, 16 years of my career, closer to 15, not 16. 15 years of my career. Um, by constantly having ideas thrown at me. Turn off CNBC. That will stop you from overtrading. That's one way to lose money. Find consistent methodologies. Hopefully, I'm sharing some of those ideas with you today, Neva. And try to surround yourself with successful, consistently successful traders. Again, another shameless promotion for the Newsbeat live room. Okay, which option strike to pick? Chung. For me, if I'm scalping, I generally, a generalization, right? Because there's not one answer that covers everything. If I'm looking to day trade something intraday, if you're asking which option strike to pick, I'm going to go for the first strike generally out of the money on the earliest expiration, much like I showed you on my software before. In terms of the new strategy we're using, I'm probably going about 2 to 3 months out on spreads. So I can sit there and hold the position and know what I'm losing, know what I'm making, and sit there and hold it and see if it works. So that is how I would go about which option strike to pick. And over time, you'll get more comfortable with it, but that's how I go about it, Chung. Brian, addressing your ego. Addressing an ego is a very interesting thing. And the most egotistical traders are the ones that made money a long time ago and can't make money anymore. Those tend to be the biggest egotistical traders. I don't have an ego when I trade. I don't trade off of an ego. Um, so in terms of addressing it, if you have an ego, you better be very consistent to justify that ego existing in the first place. If you have no justification for the ego, I would try being more vocal, especially in our room, because so many traders help each other. We have people like Colton, and I just want to show you guys what Colton does. And because I really, it's so beautiful what he does. He shows like a consistency tracker over here where traders can see if they met their goals, and your goal could be having a non-red day, a green day, a certain dollar amount for an intraday account, a swing account, whatever it is, options, a small account, and you could check in whether you're up or down money. And Colton offers that to us, and you could see some of the more consistent traders. Um, One trader's on a 23 win streak right now, and that trader, Pooty, congratulations, by the way, will post in chat trades that he's taking, and you could see who's doing well recently, and it gives the members of the room a good update on who's hot, who's not, type of thing. Obviously in the trading department, because otherwise I would be at the bottom somewhere of that list. Um, that would be one way to address the egos. Talk to traders who are doing well in the current environment and pick their brain. And a lot of people in the Newsbeat live room will help you with that. So I would just be more vocal, Brian. Lee, stock selection. This is a great question. A small groups of stocks versus a large group of stocks. It used to be back in the day that I would trade, for example, there's a trade there was a stock, um, vertical net that I used to trade 25%. It used to do about 1 million shares a day. I used to trade 250,000 shares of that stock every day with 500 share increments, and I'd only focus in on that stock. And then I would trade Newport, NEWP. Is it still publicly traded? I don't think so. No, somebody bought them out, and Vertical Net went bankrupt. VNet. And I used to trade those stocks religiously. I'd come in the morning. I had no news flow. I had no idea. I'd just type in that stock and I would scalp it all day. Today, unless you're trading like a big instrument like gold, I know they're gold traders and oil traders, unless you're trading like a commodity type stock, I have noticed that sticking with a small group of names generally does not work. Generally, you have to be open to trading new names. There could be names that you won't trade. I think it's safe to say, Lee, to have a list of names that you wouldn't trade. Like some people don't want to trade Amazon or Netflix, for example, or for example, like I don't want to trade Booking or the old Priceline, but sometimes I will do a Booking trade, especially with options. That makes sense to me if you don't want to trade like a Priceline or a BKNG now, or like a Netflix or an Apple, or maybe there's some names you just don't like. Like for me, I don't like the way Teva moves. Me, I am very and usually it'll be on stocks that have burned you before or confused you before. And me, the case of Teva is more confusion, where I just really don't understand why it does what it does. So what do I do? A lot of traders with the ego, Brian, a lot of traders with the ego will be like, I have to figure this thing out. I have to make money on Teva. This thing has to pay me. While someone with my mentality will be like, screw Teva. There's so much easy money to make elsewhere. I'm just not going to trade this stock anymore until I see something phenomenal. So I would be open to a stock selection based on news and let the analyst tell you what to trade, as opposed to you telling you what to trade. Unless you are already a consistently profitable trader with that small group of stocks, don't fix what is not broken. As a generalization, though, I will tell you that having a small selection of stocks is generally not the way to go anymore. It used to be the way to go many years ago, not anymore. Clifton, talk about trading platforms out there. Already addressed it. Your trading platform should allow you to buy or sell options, stocks, securities, forex, whatever you want with ease, with flexibility, as soon as possible, with a low commission structure. And your platform should be set up as that. I have a setup for Street Smart Edge that I use. Again, that is for Newsbeat Live members only, based on compliance and whatnot. So I did share with you how I set it up in terms of what I did. If you wish to program it yourself and do it, you're more than welcome to. I did show you how I did it, but we already discussed platforms. We're breezing through here. All right, Lee, Jay, let's talk about minimizing commissions and rebates. We're actually going to get into the really good stuff soon. We're going to get into one more thing, and then we're going to go into my topic of discussion, which is going to be how to create a strategy and finding statistical anomalies in the market. So minimizing commissions and rebates. There used to be back in the day rebates and traders were paying very low commissions. The problem is a lot of these trading records you see, like a lot of the traders who trade, for example, especially stocks only, they will be able, for example, to show you a very good P&L and they'll have definitely a wow effect. You'll be like, wow, this person's a good trader and that's really nice. But the problem is, a lot of times those traders throughout the day, for example, if they're saying I'm shorting something, they will actually end up shorting, covering, shorting, covering, shorting, covering, shorting, covering 100 times playing with the stock like this while getting rebates for their trades while they project to you that they're just shorting it once or twice. And one of the biggest signs and why I'm telling you this is be very careful about the strategies you follow because a lot of strategies are based off of a commission structure. In fact, back in the day, ask any commission trader, rebate trader as they called them, on Sirius or letter C, back in the day, letter C, where there were traders who I knew traders who were trading 2-3 million shares of Citigroup a day, trying to break even, getting filled on the bidder offer. What was it? World Trade Securities? Was it WTS? Back in the day, are they still around? World Trade Securities had a huge group of traders that just tried to get filled on the bid and offer. And I told you there was once a day that I was up under $20,000 with a negative $4,000 P&L because I traded millions of shares by just getting rebates. So my gross P&L said negative $4,000 and I traded millions and millions of shares. So maybe I would have been down more money, right? Wrong. I was up under $20,000 that day because there are rebate traders out there. There are traders who, if they buy a stock on the bid at $50 and then they post an offer at $49.99, normally they would lose 1 penny plus whatever their commissions cost them. There are traders out there with commission structures that will actually net them a profit. I kid you not. They could have a negative P&L and they can make money based on the rebate. So let's go and now I'm not a rebate trader by any stretch. I've tried it before. Somebody was trying to suck me into it, and I did well with it. And I said it's still not for me because it required a lot of monotony of sitting on the bid, waiting to get filled, sitting on the offer, waiting to get filled, using the different ECNs, and I didn't want to deal with that BS anymore. And I actually did it successfully, ironically, but I still didn't want to deal with it. Nowadays, so what do? When it comes to minimizing commissions, the first place you should go to is your broker. There are definitely free platforms out there that have no commissions. They tend to not have the best speed. So, for example, I'm doing Robinhood for my swing accounts right now, right? With a zero commission rate. With the Robinhood and the zero commission rate, I know that I'm not going to get speed on Robinhood. I already know the speed sucks. But I'm swinging. I'm willing to sacrifice speed to pay nothing to make a trade. And that to me is good. As an active day trader, you can't actively intraday trade on a Robinhood effectively. You need a Charles Schwab. You need one of the quicker trading platforms out there. Now, some trading platforms are good for stock and bad for options. Some trading platforms are good for options, bad for stock. From a 1 to 10, I give Charles Schwab a 6 out of the 1 to 10 scale for trading stock. On the Charles Schwab platform, I give them a 10 for trading options. I give Lightspeed a 9 on trading stocks on a 1 to 10. I give Lightspeed a 1 on the 1 to 10 scale for trading options. Certain platforms are designed to trade options, stocks, some of them a little bit of both. It depends on what you want to do. So when it comes to minimizing when you're rebate trading, it's most important when you're doing stock. Yes, there are rebates and options. A Charles Schwab is not going to offer you rebates, as far as I know, but a Lightspeed would. Rebates are meant for those who like to add liquidity, who don't use market orders a lot. Those are the people who are going to benefit most. But when it comes to minimizing your commissions, go to your broker. There should be some sort of standard. I don't think anybody out there, and again, hate me or love me, this is just my opinion. You could disagree with me. I don't think anybody out there should be paying more than 50 cents for an option contract. I'm paying significantly less than that, a small percentage of that. I do a lot of options. Don't let anybody tell you that your trading size, don't let anybody tell you that your trading size, um, wow, I just got good news. One of my favorite people, traders of all time, just signed up for the room. He was with us and he journeyed out elsewhere and he came back, and honestly that just made my day. That's it. My day has been made. Thank you. And he brings a ton of value to this room. In fact, he was the one who made up the bullish doji sandwich. When I referred to the person who did it, it was him. The bearish doji sandwich. And that made my day. Thank you for rejoining. Um, I got a little, that threw me off. Minimizing commissions. Sometimes they will tell you when you minimize commission. It depends on how many shares you trade and options you trade. Bull cockadoodle. No, it doesn't. It depends on who you know and who you're talking to and who's willing to do it for you and who's not willing to do it for you. Now, it's true that brokerages, when they pay commissions, just so you understand the brokerage structure, the more shares the brokerage does as a whole, not just your account and every single person's account in the brokerage, the less they have to pay when they're paying an ARCA. I don't want to go into the individual ECNs with their fees. The less they'll have to pay with the more shares they do. But for example, if you go to a Charles Schwab, they're not getting a better rate no matter how many shares you do and the 100 people next to you do, because they have billions of dollars worth of accounts here. Talk to the person threaten to go elsewhere is what I would do. I'm not telling you what to do. What would you do, Mark, if you needed a better commission rate? I would talk to the person in charge of it. I would say I have a better commission rate elsewhere, and I would threaten to leave the company unless you give me that better commission rate. I don't think anybody should be paying more than $2 for every 1,000 shares they trade. Again, just my opinion, and a lot of people will dislike me for saying that, and you could dislike me, and it's just my opinion. The truth is, ladies and gentlemen, I've made millions of dollars trading at a $15 per thousand commission rate and a $25 per thousand commission rate back in 1999. Do you guys remember old school commissions before the hype of the electronic marketing boom? With that being said, I would not go anywhere that's charging me more than $2 per thousand. I mean, $3 if you're doing not a lot of size few trades, that's fine. I would not pay more than 50 cents for every option trade, and that's just my bare minimums. I have a much better rate than those levels in which I told you, but I do size. But I would be very comfortable at those rates for me personally for what I do even today. I laid it out. How do you learn our strategy and skill, you? You know, you, the best way to learn with us is to be with us. I mean, I do videos 5 days a week. I'm with you guys 5 days a week. I'm with you more than I'm with you guys on Sunday now. We do the evolutionary gathering. We're doing more of a swing strategy, and we're going to be bringing the best brains, and we're going to be doing more and more things. It's more than what you even see. It's more than what I could even tell you because we're learning more and growing as we do this. The best way to learn our strategy and skill is to surround yourself by those people. Surround yourself by people who A, care about you. I would make a very good argument that I care dearly about you guys. You couldn't do what I was doing today if you didn't care dearly. And please, don't misconstrue this. You think I'm doing this because we have an open house today? Ladies and gentlemen, if there was no open house today, I would be here with the traders of the Newsbeat Live Room, members of the Newsbeat Live Room, doing what I'm doing right now. There's a reason why I have more videos than every single person combined, dare I say? I don't know. Combined? Is it every single person combined at the moment? No, not every person combined because our boy Austin Silver is adding videos too. But there's a reason why definitely between YouTube and Facebook since I've started, I have I have over 3 times as many views as everyone else. I have way more videos than everyone else. And I show videos consistently every single night. And if you watch the Newsbeat show, I'm here to genuinely help you. Surround yourself with people who are genuinely there to help you and will tell you how it is. Will tell you sometimes things you might not want to hear. But how many of you out there in the room was I on a phone call with in the past month? How many of you in the room that did I speak to you on the phone because I'm trying to help you and get to you and I'm not charging you to just literally guide you effectively. You have to surround yourself with somebody who cares. And there are people who care out there. I just happen to be one of them. And I'll leave it like that. And that's the best way to learn our strategy and skill. Marty, great question. What are the minimum tools? And we're almost done here. And then we're going to go into my section where we're going to go into a deep educational look into creating statistical strategies, finding statistical anomalies, and how we look to um, do create strategies from scratch. So we just have 3 more questions. And if you have any questions on any of the topics I went to and you're going to rewatch this, mark.melnick@t3live.com. More than happy to help. All right. Minimum tools you need besides Newsbeat Live. If you're an intraday trader, software that you could intraday trade on effectively. If you're a stock trader, one that's good for stocks. If you're an option trader, one that's good for options. If you want both, one that's good at doing both. In terms of both stock and options, I think Schwab is the best software out there. That's widely available. Let's put it that. The one software I think is better than them, but widely available. The one I do most of my trades on. Okay. That's what you would need. You would also need a good charting system, and I think Thinkorswim, people swear by those charts. Sounds good to me. For me, I think you need a good charting software. A paid version of freestockcharts.com or a free paid version of TC2000 would be where I would go, Marty. So you would need the right trading software for what you want to accomplish. Um, you would need the right charting software, which I gave you the two that I think are the best out there. And three, you would need a simplistic news service like Fly on the Wall or Briefing or Trade the News. You would need a very simple news service. And yeah, they cost money. I get it. But part of the Newsbeat Live subscription allows you to get all that news that I feel is relevant delivered to you in a real time manner. And those are the minimum tools that I think and I mean, besides for a computer that has, I would say nobody should be on less than two monitors. If you have one monitor and you're trading, God bless you. I don't know how you do it. I mean, I have four monitors because I'm running a broadcast, and sometimes I feel like I need a fifth. But that would answer you, Marty. How do you see Newsbeat names? You see Newsbeat names by one being part of the Newsbeat live room, and we'll share those names with you every morning in the chat and in the announcement window. We will also tweet you Newsbeat live names, like for example, um, let's see, the last Newsbeat names we called, right? General Electric, that was an amazing short. Newsbeat Live game plan name, downgrade short. You'll get it like this before the market opens. And if you're looking for overnight trades, you'll get them usually, not always, but by the end of the day. So you'll either get it in the Newsbeat Live chat room, the Newsbeat Live announcement window. Not either. I mean, you're going to get them in all of the above. You're getting the Newsbeat Live chat room, the Newsbeat Live announcement window, our Twitter feed, and through audio. So four ways that it's going to be thrown at you. Whichever one you have access to during the time will hopefully hit you square in the face, and you'll be able to access the names like that. And last but not least, before we go into what I want to go into, strangles and straddles. Strangles and straddles. So a lot of times when you look at something, you feel like a stock is going to. This is only for options, obviously, because in the stock market, you can't be long 1,000 shares of Facebook and short 1,000 shares of Facebook at the same time. In fact, it wouldn't help you much, would it? In the option market, there's a completely different spin on that. So if you could predict a stock, for example, going up or down a lot of times you won't know what direction that's going to be. A lot of times on earnings, stocks move up massively or they move down massively. So for example, the next earnings name I'm bullish in is Lululemon. Lululemon. They're reporting tomorrow after the close. Let's go into that. I think that's um and somebody our friend Dave, he has a weekly spread strategy that's used to profit from time decay with a limited risk setup, and he's going to be happy to share it with us. Can't wait. I am thrilled and excited to see it. Can't wait. Thank you for that, Dave, and welcome again. Um, so for example, I'm bullish in Lululemon. I was bullish last time on earnings. They exploded up, then they pulled down with the market, and I'm bullish. They're reporting tomorrow after hours. I'm bullish again. But let's say I wasn't really sure how much last time, for example, Lulu, and I'm just using this as a rough example. Last time, Lululemon closed at 137 and it opened up at 153. $16 and change higher, and it shot up even over 20 points at one point. Let's say there was a $20 move. Okay? Went from 137 to 159, more than 20. Let's call it a $20 move. And Lulu from the last earnings from where the stock closed to after they reported. Now, let's say, for example, on Lulu, I were to buy, let's look at the options in Lulu here. Let's look at the Lululemon options expiring this week. You might notice that the $135 calls and the $130 puts, if you were to buy both of them. So the $135 calls allows you to, for every option contract, buy 100 shares of Lulu at $135, while the $130 puts allow you to short the stock at $130. What would be the point in buying both of them? Well, right here, right now, at this moment, you could pay, and I'm rounding off, $11.50 to buy the 130 puts and 135 calls. Now, let's say for whatever reason, Lulu goes up from 133.62 to 153.62, or another 20 points on this next earnings report. So if it were to go to 153, let's call it, those $135 calls would be worth $18, or 153 minus 135. So the calls themselves would be worth $18 when in total you paid $11.50 for it. So for every one strangle or straddle you took, in this case a strangle in Lulu, which strangle and straddle, they're identical things. Straddle would just mean you bought like the same strike call and put, so you buy $135 calls, $135 puts, that's a strangle. But if you bought $130 puts and $135 calls, that's a uh, one's a straddle, one's a strangle. It's the same logic though. But my point is, if Lulu goes to $153, it gaps up big on earnings. The fact is, your 135 calls would be worth $18. You would be up about more than 50% of your money, even if your $130 puts were absolutely worthless. Now, let's say Lulu gapped down 20 points, and it went from 133 to 113. And your $130 puts are worth at least, will be worth more because of the time value and other factors, but at least $17, and you'd be also up about 50% or more of your money. So that gives you the opportunity to bet on it going up and down, and you're hoping the move is large enough to justify the cost. That is how I view straddles and strangles. So, ladies and gentlemen, it's 1:33 p.m. We're going to give you one last break here to 140. Let's do a 12-minute break. We went through a lot. We're going to talk about how to create a strategy and how to find statistical anomalies in the market. We're going to go through all of that at 1:45 p.m. We're going to go on our third and last break right now. We're going to go on our third and last break, and I will see you guys shortly. Get a drink, use the bathroom, break time, and this is our last break before we go into my juicy stuff. The juicy stuff. All right. 145. Hey James, when I open up a position, if you're part of the trial, you'll see it in the room. If you're a member, you'll see it in the room and Twitter. Do's and don'ts of following my trades. I really don't have any do's and don'ts about following my trades. If you're following my trades, try to take it with a grain of salt. So, and also try to be accurate. What do I mean by grain of salt and accurate? Well, if I buy something, let's say I buy an option contract at $1, maybe you shouldn't be paying $1.09 or $1.10 or 9, 10% more than I do. A lot of times traders get better fills than me. So try to be at or better than me or very similar. You pay $1.01, whatever, pay 99 cents. If I pay $1, that's fine. So I wouldn't really say there are any don'ts or do's. Just do, if you are following my trades, I'm consistent doing it the way I do it. So if you're going to do it, the do's would be do it the way I do it. And don't do it nice, Jane. Welcome. Welcome. Yeah, and just please keep in mind with Amber, God bless her. Her children are, you know, um, her children are going through, I hope nobody ever has to go through that. She has such beautiful kids. Um, she's in the hospital with them now, so she did want me to let you know that be patient with responses from her, but she will get back to you. Okay. And just so I don't want to quote anyone. The 12.95 is only good for today, Monica, and it goes to 14.95 on Friday or 9.95 for new. How does that work? Yeah. I know they're going to be okay. She's going to be fine. She's just going to be a little bit delayed in reaching back to you guys. Yeah, I will. All right. Existing members is 12.95 today, and new members are 9.95. Fair enough. Okay. Thank you. I appreciate that. Um, all right. You guys ready? We are I know this has been a wonderful day spent with us. I know that I just uploaded about 4 gigs to the internet. More total between YouTube and Facebook, 8 gigs of Melnick to the internet. Let's go into how to create a strategy and finding statistical anomalies. Yeah, Lee, because you would be a new member, Lee, you would have that applied. Yeah. Okay. All right. So, ladies and gentlemen, thank you. And we're going to wrap it up here with how to create a strategy and find statistical anomalies. So I recently I'm building a swing strategy right now. that has been really phenomenal. And I'm just showing you just a small screenshot from Excel sheet of our successes here. And again, the 93%, I say it over and over and over again. I highly doubt I'll maintain a hit rate like that, where you see 164 overnights were taken and 153 of them won. I by no means am claiming I'll be able to maintain a hit rate like that. It is phenomenal, but 164 trades, it's a very small sample size. For me, I'd be happy if it was over 65% on extremely large sample sizes, but for a swing trade, of course. And what we were doing was when you create a strategy, you have to sort of look for statistical anomalies. So I want to show you a statistical anomaly that I really noticed this year that's been happening with the market. I want to show you how I'm planning on improving it, and I want to show you how you can add what you look at on a chart to potentially improve it. So anyone, name a major company in the room. Not cherry picking. Name a multi-billion dollar company, a big company, a thick company. Name one. Anyone. General Motors. Okay. General Motors. So what this code looks for is it looks for a bottoming out green candlestick in which the green candlestick bottom is the lowest bar in a 10 candlestick range, or a topping out red candlestick where the red candlestick is the highest bar in the last 10 candlestick range. So let's look at General Motors and see. I'm going to delete the trend lines here just to see when was the last time. And maybe I should just try to one chart it. There we go. Just candlesticks. We'll keep it simple as possible. Question. Using my methodology where you're looking for a red candlestick where the high of that candlestick is the highest in a 10 candlestick range, was our methodology effective on December 3rd? That was the last time it would have triggered. Would have it been effective going short General Motors on December 3rd by the close? Okay, yeah, obviously, right? We had a big down day, Mark. It was a fluke. It was a fluke. Okay. When was the last time we could have gone long? Was Thursday, November 15th, the lowest candlestick in the previous 10 candlestick range that closed with a green bar. Now, just keep in mind, when I'm talking about a red bar and a green bar, I'm not talking about how much you closed up or down for the day. I'm talking my red and green bar is set for the following. So this is very important. The color of my bars are based on open versus close. So if a $50 stock gaps up to $70 where it opens up the next day and closes at 65, it would show a topping out red bar. So using my methodology would have also called the long the trade it would have called short on Monday, buy puts on Monday, and would have said buy calls on November 15th. Now, the short on Monday would have worked right away. The market plunged, and we were involved in Caterpillar, which worked out great as well, right? But let's go back to General Motors. Look at this right over here. So if you bought it at the close right here, you would have bought it, let's say you got it at the close at 35.55 on Thursday, November 15th. You wouldn't have really been, it would have dropped on you to 34.85. The stock wouldn't have been with you the entire time. You would have been up a little, down a little, break evenish a little, up a little, and then only then on November 26th, you would have exploded out and then you would have been up nice, right? You guys can agree with that, right? Especially on the option side, right? It's a good question, Eric. So the whole point of it being, what should have we done? What do you mean not? Of course we're counting wicks. Tails don't matter, or wicks, candlestick wicks don't matter. Of course we're counting them. So, with that being said, how should have we played it here? That is the question. This is where it gets really interesting. So, our methodology would have said short GM or buy puts on GM on Monday. Our methodology would have said buy calls or go long GM on Thursday. Now, how do we create a strategy around it? Here is my thought. The stock closed at 35.55 on Thursday. Let's assume that that would have been our price. We would have bought it 4 cents off the day high on Thursday. Definitely not good on the intraday. I'm thinking you could have gone straight calls, but you would have watched your options bleed itself out for an entire week before working the very next day. Me, I'm concerned about the psychological toxicity. I'm concerned about the psychological toxicity. And this is where our discussion really blossoms. I said, why not take a call spread where I'm not going to really be up or down that much money here at all, where I'm buying a call and shorting another call. And again, over when this is done, please look up on the internet what a call spread is and a put spread. Uh, I I won't explain it better than freeinvestopedia.com. But my point is, why not just not really have the position really going against us or with us up until this happens right here? Then the stock explodes and we crush it because General Motors pops 10% a week later. Let's see, last times our strategies would have activated. Right over here would have been the last time it activated using the methodology I'm sharing. It would have said go long right here on October 19th on that Friday. If we bought a call spread, what would have happened? Would it have leaned up the next day? Would be up a little. Then it would have opened up. We would have been down and shot up, and we would have been up decently on Tuesday. Would have plummeted on Wednesday, and then would have broke out and absolutely explode to the upside. So my point is, my methodology that I've been showing, the win rate that I showed you in the Chinese market, the win rate I showed you in the Taiwanese markets were 100% overnight trades. 100% of them were overnight trades and were purchased in the final minutes of trading. Just so we're clear. I mean, I didn't tell you that before, now I am. It's similar to what we're doing now, but that is part of the parameter. So if let's say you didn't sell GM here when it popped up and you bought it at 31.20, it got as high as 32.40, went $1.20 in your favor, and then it fell and then it popped. Let's say you didn't catch it. I think call spreads. Oh, Facebook Live is telling me I have 10 minutes remaining for this Facebook Live broadcast. I guess I'm going over a certain amount of time for this broadcast. So what I'm going to do is I'm going to stop this broadcast right here, guys, and I'm just going to do a new broadcast. We're going to share with you a new broadcast and a new link to the broadcast. So, and then we're going to go right back to what we're discussing here, and we could start it with a fresh video. So I hope you guys really enjoyed as much as I did today. I genuinely enjoyed spending this day with you. And we're going to go into how to create a strategy and finding statistical anomalies. There's a time limit on Facebook Live. I don't blame them. I'm uploading gigs and gigs and gigs to their server. I get it. And we're going to record it on Facebook Live and YouTube. So we'll see you guys in a second. But if nonetheless, just for this video alone, I hope you guys enjoyed our huge free education bonanza. And we have more. and we will be sharing that with you shortly. Hope you guys enjoyed it. Happy trading, make money, and I'll see you guys in seconds on the new recording.